Good morning, everybody. Welcome back to another episode of the Market Open. It is Wednesday, October 30th, 8:46 a.m. Eastern Standard Time. We are live once again on another Market Open to discuss the global capital equity markets. Today is going to be a very interesting day. We've got a lot going on already in the pre-markets with a variety of companies that reported. I didn't even know we were getting GDP data today. We got GDP data. On top of GDP data, we got jobs data. Both of those were surprises. The market is kind of flat to greenish on those surprises. I would say positive surprises slash negatives. I mean, there's a little bit of negativity there, but there's a lot of positivity there in terms of how you analyze the bull case for what that data looks like. So we're going to talk about that, go through that. We had Eli Lilly earnings this morning. We had Shake Shack this morning, Caterpillar this morning, a bunch of companies. Eli Lilly down 10%. We got to talk about why they're down 10%. It looks like the bootleg Ozempic stuff is affecting them a little bit now. And then we got to discuss Google yesterday, which absolutely smashed. Like when I mean smashed, I mean smashed earnings. So far, I'm 2 for 2 on big tech. I said Tesla would go up. I was right. I said Google would go up. I was right. I didn't buy Google or Tesla before earnings because I'm too much of a chicken to actually buy on my calls. But so far, we're 2 for 2. Google right here at 181, up 6.7%. It's not the biggest move of Google, given that Google's been flat for the past couple months. But I think a lot of people have the perspective that Google would tank, even though it was already down a lot. And my thesis was, all right, it's down a lot. If there's any good numbers, the algos will take it up. And I think that's pretty much what happened. But the numbers aren't just like pretty good numbers. They're quite phenomenal numbers when you look at Cloud, the Gemini monthly active users, and their progress with Waymo. That is now doing 150,000 paid rides a week in September. That number was 100,000 paid rides a week. So the autonomy market is expanding as well. We'll talk about that. And then we have AMD. That's down 8%. Jose will be joining at 10 a.m. He has AMD as the second largest position. So he'll talk about AMD, kind of what's happening there. They lowered guidance in a couple different revenue streams for them. I don't know if that's a reason for it to be down 8%, but it is down 8%. And so we'll be discussing that and all the other earnings we had yesterday, like Snapchat, Visa, etc. And then after the bell today, we've got a Robinhood. That'll be a big one. I'll be live at probably 3:30 p.m. Eastern Standard Time, getting ready for that earnings. We've got Meta, we've got Microsoft, we've got Coinbase, we've got a lot of companies today after the bell. So there's a ton to discuss on the market close, and we will get into it and keep going from there. All right, let's get started. Thank you, everybody, for being here. Michelle, Steve, Justin, Quarantine Quartet, Danielle, Hakan, Nolan, Crowd Control, Lena, good morning. Hugo, what's up? What's up? Thank you for being here. Drew, Noland. We got Broccoli Bob. It is not my birthday again. I'm officially well into the 27th chapter of my life. So we'll have to wait till the next October for me to continue to get older. June, what's up? Brad, Silly Blunt, Mike, Broccoli Bob, Dylan. All right. Thank you, everybody, for being here today. Let's get started. So Meta, by the way, yes, Aniket, Meta is at an all-time high because of Google. So when we talk about Google, we'll talk about the implications of that on Meta and Amazon. By the way, real quick, where's Amazon? Because Amazon loved Google's cloud numbers. Look at Amazon up 2%. All right, so when we talk about Google, there'll be a lot to discuss in the Mac 7. So let's start off with macro data. Pretty decent data. So this morning, I didn't even know these things were coming out, but they did come out about 20 minutes ago. And here's what we got going on. U.S. GDP growth for Q3 comes in at 2.8% versus expectations of 3%. So lower growth than expected. However, markets really didn't care about this because it's not like 2.2, 2.3. I mean, 2.8 to 3%, it's kind of a rounding error when it comes to GDP growth. On top of that, you have some expectations that were not 3%. It was 2.9%. So the miss was not that big of a deal. So overall, markets really didn't care that much. And there might be a reason why that GDP growth coming in lower is actually good that I'll talk about in a second. And then this was the big one that surprised. ADP private payrolls for October came in at 233,000 jobs added in the private sector. Again, we'll get the official numbers, I think this Friday or next Friday. I'll confirm that, but we get the actual payroll numbers versus 115,000 expected. So private payrolls, it looks like in October are going to beat. Remember in September, we had 254,000. That was a big beat against the 140,000 the street was expecting. 233,000 versus 115,000. There's a couple things to talk about from that perspective. Now, private payrolls is a big beat, but it might have been recorded before the hurricane. And obviously that could be weakening to the labor market, but it continues to show the labor market is relatively strong. The downside effect to the job, the job beat of 100,000, 233 versus 115 is that the 10-year will probably maintain some of its momentum until we get another rate cut. Inflation could be sticky if we're adding these many jobs. Again, I think that whole job growth, big inflation sticky narrative was like in January, February, March, when inflation was like above 5%. Now that inflation is coming in below 2.5%, I don't know. I mean, I actually don't know if we add more jobs, is that actually bad for inflation given it's much lower? One could argue yes, because it's harder to go down when you're already so down. And so any level of stickiness could create it to, could maintain it to still be sticky. But another argument could be that, hey, it's not going to be that sticky because we've resolved a lot of the outstanding and external factors like oil prices and shelter and energy that have started to come down, which is why even if more people have jobs and they have more money and they're spending more, that doesn't necessarily mean inflation has to reaccelerate. The big reasoning for why I think this is bullish, and that's why the S&P is green right now, is that, hey, if people have jobs, again, if people have jobs, well, then how do we get a recession? S&P right 500 right here, it's flat, slightly green to flat. But remember, the overarching thesis for a recession was people don't have jobs, they don't have money, earnings growth can't go up if people can't spend because they don't have disposable income because they don't have jobs. That's just not what we're seeing. So the only downside effect to that thesis is that inflation reaccelerates, which means we don't get rate cuts. And we'll see with CPI numbers next week, but it doesn't kind of feel like there's going to be this dramatic reacceleration. Maybe I'm wrong. Maybe it goes from 2.4 to 2.6 next time, and the Fed's like, all right, we got to hold off. But if it stays flat at 2.4, it goes to 2.3. It's not going to be the worst thing in the world. So those GDP numbers or those job numbers were very important. Again, to re-summarize, the bad thing about it is tenure could remain higher because the labor market is strong and inflation could be sticky. The good thing about it is that if inflation is not that sticky and the 10-year ultimately comes down with a rate cut, that means people still have money to spend. And ultimately, that is the driving force of the economy. Do people have money to spend? In terms of GDP growth, again, 2.8 versus 3%, not that big of a deal. So when you look at the economic data in totality, if you're just joining US GDP growth at 2.8 versus 3, jobs data at 233,000 versus 115, people have jobs. People can spend money. That money is going into the economy. That is affecting US GDP growth. We are seeing 80% of companies beat on their earnings. And if they're missing, like Eli Lilly missed today, they are getting punished. So the ones that are missing are getting punished. The ones that are beating or even beating slightly, they are getting rewarded, which is healthy in this economy. It is letting us know that Q3 looks like it's shaping up to be a decent quarter for the economy. And hopefully that continues into Q4 as well. So that's what we've got going on in the context of the macro data. If the jobs data is on Friday's in line with this, then do we get a rate cut in November? Good question. I think if we add 233,000 jobs on Friday, which kind of feels like it would be more, maybe 250,000 because the private payrolls on ADP is not accounting for the government jobs that could be added. Look, I still think we get a rate cut. Now, maybe I'm a little too ambitious there, but I kind of don't think I am. If you look at the Fed futures, they're pricing in a 98.9% chance of a rate cut. Let me see if they got updated based on this private payroll report. Yeah, it went to 96.2. So, I mean, look, there is an argument. It went down 2%. So maybe when we get the actual jobs data on Friday, it goes down even further. But the Fed does not want to surprise the market. And this would be a hell of a surprise. Like when they did 50 versus 25, it actually was 50-50 for a while on the rate probabilities in terms of what we would get. And that's why it wasn't a surprise when we got 50, because everyone was speculating that there is a chance we would get 50. I mean, there's 3.8% of people based on this futures tool speculating that we would not get a rate cut. And as a result of that, it would be a massive shock to the market. The Fed really doesn't like to do that. And usually the market kind of knows what's going to happen before it happens. So, I mean, we'll see. But I think if we still add 250,000 jobs on Friday, it shouldn't affect the potential of getting a rate cut. Where are oil prices this morning? Oil prices are up slightly, 2.25%, 68.72. So you've got oil going up a little bit today, but it is still down below that $70 level. Okay, SMCI is down 20% right now. You guys are telling me this for the first time. If I had to guess why SMCI is down 20%, oh boy, it is down 20%. If I had to guess, I would say it has something to do with their 10K form still not being filed. That is my guess. Let's take a look right now, and then we'll talk about Google. I would imagine, because I still don't know if it's been filed. Does anyone know if it's been filed? I feel like it hasn't been filed yet. And if it hasn't, maybe the DOJ is upset. Okay, here we go. SMCI's independent auditor, Ernst & Young, resigns. Holy shit. Over governance and transparency controls. This, I don't know if this is exactly 10K, but this is related to it. Citing doubts on board's integrity and reliability of financial statements. Board forms special committee with Cooley LPP or LLP and secretariat advisors for ongoing review of SMCI. Oh boy, that is not the best. For your consulting firm that is auditing you, KPMG, Ernst & Young, Deloitte, Accenture, etc., PricewaterhouseCoopers, PwC, right? These are very, very big companies. For them to resign and not take your money because of how bad your books are, apparently that's what I'm interpreting from this. That's not good. That is not good by any sense of the imagination. I mean, unless the only kind of intricate sort of part of this is that Ernst & Young messed up on their review over the past couple of years, because I imagine they've had them for a while. And it was Ernst & Young's responsibility to find something bad happening, like red flags, a while ago, and they didn't. And now they're trying to cover by just recusing themselves and getting away from the situation. But it also could have been that they didn't find any red flags until the past 6 months, and now they're just like, all right, these red flags are too big to ignore, and as a result, we have to take action here. So SMCI down 25%. I'm scared to look at Nvidia. Where is Nvidia? Nvidia's down 1%. Okay, so the market's not interpreting it yet with Nvidia. AMD is down because of earnings, not SMCI, but this definitely doesn't help. AMD down 7%. Intel, we'll get Jose's thoughts on this when he joins at 10 a.m. Intel's down about 1%. This seems like an SMCI thing. Question is, are people going to buy the dip on this? Are people going to buy the dip on a auditor leaving a company because they're afraid of the books being cooked? Given the growth of SMCI, I mean, look, the growth is still going to be pretty astronomical. They raised guidance by $3 billion. Is that enough to make you think that a audit by a consulting firm is just not that big of a deal to not take advantage of that dip? Not sure. So that one's down 20%. All right, so that's breaking right now. If you're just joining, SMCI down 21% after their auditor decides to stop auditing them because they feel that things are too fishy to continue engaging with them from a financial perspective and a legal perspective. So that's what you got. And it looks like this is their accounting firm, their public accounting firm. So this also feels like this is cooking the books, right? There's something wrong with their actual balance sheets, their data, their income statements, something, the way they're collecting revenue that's getting EY to recuse themselves from this. All right, so that's what we got on SMCI. Let's go to Google. Let's talk about Google. We got to do a big segment on Google. We got a lot happening on Google. Eli Lilly, yes. I mean, real quick on Eli Lilly, they missed because let's do Eli Lilly real quick, then we'll do Google. Eli Lilly's down 10% right now. They've lost about about $80 billion in market cap. Why did they lose $80 billion in market cap? Well, Ozempic has a lot of copycats. I mean, this is one of the reasons why Hims is doing well, because they copied Ozempic. And apparently that's not the best thing for Eli Lilly. So they missed on revenues. They missed on EPS. They lowered their fiscal year 2025 guidance. And that's primarily based on the idea that they're not going to hit the numbers that they thought they were going to hit. Particularly the numbers that missed for them was this right here. So let me pull this up. This is one of the drugs that starts with a Z that I probably will mess up pronouncing, which is Zepbound. I don't even know what this drug is. Is this the I was gonna say fat drug. I don't mean to say. The only reason I was gonna say fat drug is because this guy wrote "Bye Bye Fat Bubble." That's the only reason I'm gonna say it. But their third quarter Zepbound revenues $1.26 billion versus $1.63. Full year adjusted EPS is $13.02 versus $13.52. So again, that's down, and they're down 11% as their full year outlook misses the estimate. On August 25th, Eli Lilly & Co. is now selling vials of its blockbuster weight loss drug Zepbound to patients for as little as $3.99 a month, and their pricing power, essentially on the ability to charge whatever they wanted, started to go down. So that is why Eli Lilly is down. Caterpillar as well missed on revenue and EPS. Doug says, to put Eli Lilly in perspective, they almost lost an entire pound here this morning. That is correct. 10% down on an almost $1 trillion company is a decent amount that is going down. Now, look, my perspective on this is Eli Lilly was up almost 70. Let me get the exact number. Eli Lilly stock year to date before this 10% drop, it was up 52% year to date. So yes, they are down because of a revenue miss and an EPS miss. And this is the first major company, by the way, in the stock market that has gone down 10% on EPS or revenue in Q3 earnings. So we have Microsoft, Amazon, Meta this week, and we're going to see how they react. But no really, really, really big company that matters, that makes up a significant portion of the S&P 500, was down 10% so far in earnings season. Eli Lilly is the first one. So it's going to be interesting to see kind of how the street reacts to that. I think there's going to be a lot of dip buyers. Eli Lilly still has a very long trajectory of growth. Now the stock is up 52%. So the question becomes, is a 10% dip from a 52% year-to-date gain juicy enough for people to get excited? And we'll see as the market opens. But it's reasonable for it to go down 10% after being up so much and missing your estimates. Like, you can't miss your estimates by this wide of a margin and be up this much year-to-date and not expect the street to get a little upset. So that's what we got on Eli Lilly. June says Eli Lilly is too highly priced, even if they are firing on all cylinders. Their PE is 55. Probably will come down as the market opens. Trailing 12 months PE is 111, though. So that's fair. The forward PE is 55. Yeah, that is kind of crazy, dude. I mean, the market's, but again, I think the market gives them these price multiples because they feel they had a pseudo monopoly in a lot of the drugs they're building. But if that's not the case, right? If they don't have that monopoly, if they don't have the elasticity of pricing power there, well, then there's going to be a little bit of a haircut, at least until they feel there's a stronger catalyst for Eli Lilly. SMCI just hit 30%. Goodness gracious. So people are not buying the dip on this one. People are not entering this one. Wow. $34 on SMCI from 49. I mean, look, Hindenburg put out that short report. They failed to file the 10K a while ago. And on the actual earnings itself, I mean, remember, gross margins went from 15 to 11%. This is already a hardware business that is doing 11% gross margins, even though the growth is amazing and they're connected with NVIDIA and all this stuff. If you're not making any money off that's why people love NVIDIA so much. They're making 70% margins on a hardware company because NVIDIA has like basically a monopoly on these GPUs, but SMCI is not the same. SMCI at the end of the day is doing something similar to what Dell is doing, and there's a lot more competition there. So SMCI right here down 32%. We'll see if that one continues to hit to the downside as the market opens. Doug says the U.S. has reached peak fat and got its first month of downtrend in obesity, so declare victory and sell the stocks. Well, look, I mean, even if that's not good for Eli Lilly, that's great for the United States and just healthcare in general. If people aren't, continuously being obese. But look, I think this is more so to do with the copycats of Ozempic, not the demand of Ozempic going down. And if it's more about copycats, maybe there's a way Eli Lilly can kind of harp down on those versus necessarily the American public is not continuing to be obese. But if that's the case, then that's a good thing for like people's health at the end of the day. Okay, Google. Let's talk about Google. Google crushed it. Google absolutely smashed earnings at a level that honestly we haven't seen in a long time. So Google right here beat by $2 billion on revenue, 88.3 versus 86.2. So that was important. EPS 221 versus 184. That was incredible. Got a 26-cent beat on EPS. And then you've got, that's a 36-cent beat on EPS. So that's pretty incredible. And then you have operating income grew by 4.5%. YouTube now does $12 billion in revenue a quarter, and cloud grew 12 or 35% to $11.4 billion in the fourth quarter. I mean, it's just unbelievable, dude. It's just unbelievable. Revenue increased 35% to $11.4 billion in the third quarter, reflecting accelerated growth in GCP across AI infrastructure, generative AI solutions, and core GCP products. Once again, GCP grew at a rate that was higher than cloud overall in the history of Google Cloud revenue growth, which is pretty incredible for what we got with Google. We got another 50 gifted. Derek, I think Derek has like a goal to make every single person a channel member at this point. Derek, thank you for the 50 gifted. Appreciate it. We're talking about Google right when Derek steps in. By the way, Bitcoin is doing pretty well as well, holding that 72,000, even though it's down a little bit from 72.5. But thank you, Derek, for the 50 gifted. I think a bunch of you guys in the chat are about to get a gifted membership. If you are already not a member, it'll give it to you randomly from YouTube. So you'll get a ton of gifted. Derek, what you're doing, given that we're speaking about YouTube, is you're helping Google right here, because YouTube's going to take a little cut of this. So yeah, Derek is fueling YouTube's revenue growth, which is ultimately helping Google. So you got Google Cloud right here increasing by 35%. That was amazing. And then on top of that, you've got Waymo. So take a look at what Sundar said about Waymo. Now each week, Waymo is driving more than 1 million fully autonomous miles and serves over 150,000 paid rides. The first time any AV company has reached this kind of mainstream use. What does that mean? Well, that means a couple things. Number one, I think that's super bullish Tesla, because that means if Waymo can do 150,000 paid rides a week, when we actually have a real robotaxi network and fleet of vehicles that Tesla puts out via the Cybercab, I think the demand for that is insane, right? And Tesla just has to tap in that demand, create a better product, better service, better experience than Waymo, and they can probably take away some of that market share. And then on top of that, you've got Waymo raising $5.5 billion the other day. Why did they raise $5.5 billion the other day? By the other day, I mean on Monday. It's probably because investors saw that they were doing 150,000 paid rides a week. And so they were easily able to raise that $5.5 billion because the growth and momentum that they're having from 100,000 paid rides in August is pretty incredible. So in the course of 3 months, they were able to go from 100 to 150. So that was one of the big things that we have from Google when it comes to cloud. And then when it comes to Waymo, on top of that, the ad business is doing fine. So Google grew 15% in general. Services grew 13% to $76.5 billion, led by strength across Google Search and YouTube. Cloud again grew 35%, and total operating income increased 34%, and operating margins expanded by 4.5%. Again, we're seeing this almost in every big company that we're covering. Even if they're missing on revenue, which Google did not miss on revenue, but if they are missing on revenue, they're beating on EPS. And they're beating on EPS for two reasons. A, they're buying back stock, which helps. But B, they are becoming more operationally efficient. For Google, a $2 trillion company, to expand their operating margins by 4.5%, the amount of work they have to do to rein in the costs and become more efficient. And maybe that's a bull case for AI, because if they're internally using their AI products and that's making employees more productive, and one employee can do the work of 5, and that's just leading to more overall growth, then that also could be a reason for why Google is seeing this momentum. And if they're increasing their operating margins by 4.5%, maybe the other hyperscalers do as well, then that's very, very bullish for the overall trajectory of the Max 7. Now, here's the thing. Amazon reports after the bell today. Amazon's up 2%. I think Amazon is up 2% for two reasons. If Google is showing this type of advertising growth via search, then that means Amazon search advertising via their own system and Prime ads and pay-per-click advertising that they have should also grow very well. Number two, if Amazon grows operating margins by 4.5% like Google, Amazon's going to 250, bro. Like, because the biggest thing that the street hates about Amazon is that, again, we've been saying this for the past couple of weeks now, but they don't make money on a lot of parts of their business outside of AWS. Again, they make money. It's just not a lot of money. The selling water bottles from China is not a high margin business, but it keeps you into the Amazon ecosystem, and that's why they do it. So if they can actually get a margin out of that, and it doesn't have to be 4.5%, it could be 0.95%. Like, the street would go crazy over that. And so that could be very good for Amazon. On top of that, cloud growing 35% either means two things. A, it means that they're taking market share away from Microsoft or Google or Amazon. Or B, the pie is getting so big when it comes to clouds, particularly led by AI workloads. All these startups that are raising all these venture capital deals that they have to rent AI workloads, AI compute from either GCP, AWS, or Azure, and then Amazon, Google, and all these guys pay NVIDIA for those chips. But that is revenue for the cloud businesses that are growing at a pretty incredible rate. So if it's the bullish side versus the bearish side, the bearish side is Google's winning, Amazon and Microsoft are losing in cloud. The bullish side is the cloud's getting so much bigger that there's so much more pie to capture, which means maybe Microsoft grows at 30%. AWS probably not going to grow at 30%, but maybe grows at 23%. Like, these cloud numbers can be pretty incredible. Today, we're going to see what Microsoft shows off. And that's why I think the Max 7 are up right now. So Microsoft right here is up 2%. Again, that's a big move on a $3.2 trillion company. And then Amazon, which has been stuck in the 170s, is now at 194, up 2% on a $2 trillion company. And I think it's because Google is signaling to the market they're going to beat on their cloud revenue growth expectations. And that's very bullish. Very, very, very bullish for Amazon. Amazon is tomorrow. Yes. Microsoft is today. So we'll see what happens with Microsoft. So again, dude, Google was incredible. Waymo's firing on all cylinders. YouTube's growing 12 billion a quarter. Search business is fine. It's not dying. In terms of the call itself, they were asked about Perplexity. They weren't asked literally about Perplexity. They were asked about like AI search engines. Sundar gave a good answer. It wasn't like the most exciting answer in the world, but he was like, we are finding different ways to monetize Google search. We're going to put ads beneath the generative AI overview. So the people that use the product, they're not going to need to go to another product, but they're also going to have the chance to click on sponsored advertisements, and pay-per-click advertising is not going anywhere. And then he just said the data moat that they have ultimately is going to allow them to create better user experiences, which is the answer you're supposed to give. I wish there was a little bit more substance to that answer, like a little bit more fire in terms of how exactly they're going to defend this search monopoly. But he pretty much said we're going to defend it. And as per expectations right now on the street in terms of the stock, they kind of believe him right here, which is why they're happy to give Google a 5% bump. On top of that, Gemini, here was the big stat that I thought Google introduced that was very interesting. Gemini has 2 billion monthly active users. And again, that's not literally 2 billion people going to gemini.google.com. But if you are, for example, using Palantir's AIP at BP and you click the Gemini model inside of AIP, because AIP is what condenses all those LLMs, then you are technically a user of Gemini at that point. So Google Maps also reached 2 billion users per month, and so did Gemini. So now you got Gmail, Android, Search, Chrome, YouTube, Google Play, the App Store. All of these got about 7 products that Google has that touch 2 billion people per month, which is why I feel like breaking up this company would be a disaster. I mean, like I really think that they create more shareholder value by allowing the cross collaboration of all these products. Not like, could you imagine if all these were separate companies? Like it would, I don't think it would be bullish for Google, but we'll see how that ends up playing out. But overall, very, very, very strong quarter for Google. And they show that they're doing well. Now, the last thing on Google is their CapEx spend. So they spent $13.2 billion on CapEx, which is good. It is 62% above last year's CapEx spend. So 62% increase is very bullish. Not all of that is going to NVIDIA, but a decent chunk of it is going to NVIDIA. A lot of it's also going to data centers, buildings, materials, all that stuff. However, they said fiscal year 2025, they expect to spend more than they're spending in 2024, which is not a horrible thing. Now, it's not going to be that much more, but it is going to be more. Not all of that's going to go to NVIDIA, but if some of that still continues to go to NVIDIA, then that should be a decent thing. Now, the one thing about this is that CapEx was flat at 13 billion quarter over quarter. So year over year, it's up 60%. And they're guiding in fiscal year 2025, they're going to spend more than, I think, this 60 billion, 65 billion they're going to spend this year. But it's not increasing quarter over quarter, which actually is probably one of the reasons why their operating margins were not hit that bad. And one of the reasons their EPS growth was beat by 30 cents. But I don't think that's necessarily bearish for NVIDIA just because they're not increasing month over month or quarter over quarter in their CapEx, because the year over year increase at 62% is still so massive, which is very important. For those that are just joining, we talked about SMCI already. I know a lot of you are joining and you're like going crazy over SMCI. We talked about it literally 10 minutes ago. The reason SMCI is down now 31% is because they have their auditor, Ernst & Young, has decided to fire themselves, essentially. They've quit. They're saying, we don't want any of this shit. We don't want to deal with this. So that's why SMCI is down right now. Look, my perspective on this is simple. I'm not buying this dip. Because SMCI, I just don't overall love the business, even though they're growing really nicely. Like, honestly, I'd rather buy NVIDIA at 140 than SMCI at 30. And I know that's crazy, but like, just to sleep well at night, I feel like NVIDIA is better. B, if an auditor that does your public accounting is saying, hey, we're out, bro, then yeah, there's something that's fishy there. Now, maybe it's not fishy enough to justify a 30% dip, but it's fishy. And currently the fish has no gills on it, which is why it's drowning in the water. That was good. I came up with that on the spot. It requires a certain level of intellect to do that. And that was good. But the point is, SMCI right now is underwater and she's drowning. Okay, we have Lisa Su on CNBC. Let's pull her up to talk about AMD earnings. Let's get her perspective on what's going on with the quarter. And then we will keep going from there. All right, here we go. Here is Lisa Su on CNBC on AMD.
First of all, it's good to see you guys this morning. Look, we had a very strong third quarter. If you looked at the overall growth, we grew 18% year over year. We had a very strong data center quarter. We had a very strong server quarter. We had a very strong AI quarter. And we actually, as you said, we raised our guidance from 4.5 billion of AI revenue to greater than 5 billion of AI revenue for 2024. So overall, lots of positives. And, look, this is a long-term growth story. You know that. When we think about, the massive demand that there is in the data center for both AI and traditional compute, we are one of the very, very few players that can offer all of the different compute capabilities that are required. So, from that standpoint, I think, we feel very good about where we are. Going into the end of the year, we're going to grow in the fourth quarter at our guidance, 22% year over year. And that's all about, growth in data centers, growth in servers, growth in AI, and also growth in PCs. So those are all positives that we see in the business.
Now, PC and server incredibly strong. I see you taking incredible share. Thankfully, from another company that at one time I met you when your stock was at 4 and they were at 50. You told me to get out of the 50, go to 4. You're taking share from that company, aren't you?
We are having a very strong CPU cycle, I can say that. We just launched our Zen 5 processors, strongest portfolio, we've had overall. We are firing on all cylinders. When you look at, this traditional server market, we're starting to see refresh cycles actually in both cloud and enterprise, and that's showing through in the overall demand. And, we also have a very strong portfolio when you look at, the AI market as it relates to PCs. So that's another nice growth vector for us. And we're at the very, very beginning of that cycle as well.
One of the reasons that we own your stock for the Travelers Trust and have for some time is we are firm believers that AI is so big that it's not just that actually has room for two players, that it's not just Jensen Huang and then nobody. Could you make the case that actually you are a strong number two and getting stronger?
Yeah, absolutely. Look, I am a huge believer in AI. This is really the beginning of, what I like to call it an AI super cycle. We believe AI is going to be in every aspect of computing, whether you're talking about, the large clouds, enterprises, you're talking about the edge, or you're talking about, PC clients. And you need all different sizes of compute for that. And that's exactly what we have. We're at the beginning of the cycle. And, as we said at the top of the program, we started with our MI300, AI GPU, just about, 10 months ago. We announced it in December of last year. We said, hey, we think revenue will be about $2 billion. And we knew that this is at the very beginning, but we've had just incredible partnerships across all of, the cloud, the largest hyperscalers. We made great progress with Meta, with Microsoft, with Oracle, with a number of AI players. And we're going to continue to do that, going forward. So I think AI is really at the beginning, and, our goal is to be a very, very strong overall compute provider into that space, and really partnering with the largest vendors in the industry.
Lisa, I know it's not that large a part of your business, but the gaming sector seems to be giving some people issues this morning in terms of at least what appears to have been a sizable miss in terms of what analysts who follow the company anticipated. What can you tell us about what you're seeing there?
Yeah, absolutely, David. So it is true. So if you look at the third quarter, we saw strength, higher than expected revenue in data center, higher than expected in client. Actually, a good recovery in our embedded business, which is one of the ones that serves the broad markets. And in gaming, we were a little bit lower than expected. It is really just where we are in the cycle. I mean, the gaming business is a good business for us. We are very dependent on game console sales, and I think we are in the latter part of the game console cycle, which is as expected. But overall, I think when you look at the growth drivers around data center, around AI, around PCs, and a recovery in embedded, we're actually seeing lots of positives. And that's the beauty of our model, frankly, is that we have such a broad product portfolio that covers such strong markets.
Lisa, David mentioned
The gaming concerns to me are weird because I don't know anyone who's buying AMD for gaming. So like investors are a little upset that gaming is a miss, but like that can't be the reason you're interested in AMD. So not really sure why investors are that upset about that part of the report.
a moment ago how some of these hyperscalers are rethinking energy supply for the long term. And I wonder if you have the sense of whether or not they're on the case or there really truly will be a crunch when it comes to energy, say in the next 5-10 years.
Well, Carl, I think the main thing that we see is, nobody really predicted just, how fast this AI market was going to grow. I mean, if you think about, just, a year ago where we were, and the fact that there is such strong CapEx spending, it is placing a on data center space and power. We see that as we talk to customers. But, as a industry, we're really good at attacking problems once we see that they're there. There's a lot of focus in ensuring that, there's enough, power and data center space to really have, room for all of this AI compute that's necessary. So we're working on all aspects of that. And, I do believe that, we'll continue to make, significant progress in those areas.
Lisa, a longer term question. We're all struggling, or at least I do, to try and understand what this future is going to hold in terms of AI and understand various projections. So there are some I've spoken to who believe as you move more to inference, away from just running the large language models and all the data and taking it all in, that you may not need quite as much compute power, that inference will be more efficient or perhaps require less. How do you see that as generative AI evolves here?
Yeah, absolutely, David. Look, we see the generative generative AI arc as, really going through multiple steps. I mean, these large language models are amazing. We've made excellent progress when you think about, where we are today with some of the OpenAI models or some of the Llama models. I mean, they're great, but they can get better. I mean, we really do believe that AI compute will enable the models to get even better, smarter, allow you to do, fine tuning as well as inference. And one of the things that I firmly believe is that there is no one size fits all with compute. So yes, as inference comes along and we expect inference to continue to grow, there will be, other types of devices as well. But the beauty of it is, we have a broad portfolio to really address it. So from an overall standpoint, I think we're forecasting strong growth for AI compute. We recently updated our numbers to say that we believe the TAM for data center AI will be up to 500 billion in 2028, and that'll be a combination of both training and inference and all different types of compute in there.
Lisa, we'll put you on the spot here in the sense that right now NVIDIA, Qualcomm, ARM are all down big. And it's not necessarily in conjunction with you on the idea that there's no demand or slacking demand. I'm not taking that right out. You did mention the word supply at one point in the conference call. Therefore, people believing Taiwan Semi cannot supply you with what you want. And because you can't be supplied with what you want, you're going to miss the numbers maybe from here to eternity. Could you please explain what happened with the discussion, the narrative of supply, and whether that was correct in relation to Taiwan Semi and correct in relation to supply that you'll have for 2025?
Look, Jim, the one thing I would like to say is we feel extremely good about the AI market overall. This is one of the most exciting markets, the most exciting market that I've been a part of.
Look, I love Lisa Su and her excitement is amazing, but the problem with AMD is as excited as she is about the data center growth market, the growth is not there in the same way as NVIDIA. And that's why AMD is technically more expensive than NVIDIA. And so if they're this excited about capitalizing on this market, they need to grow. And unfortunately, their next generation chip next year is going to be just as good as Blackwell when NVIDIA will be on the chip after Blackwell. And that is the divergence in the market caps between NVIDIA and AMD. The growth rates are just fundamentally different.
It's natural for there to be tight supply. It's natural, right? This is the way the semiconductor business works, which is, as demand goes up, you need to build more capacity to do that. I think our supply chain partners have done an excellent job. I think, we have done an excellent job. Our supply chain team has really ramped up capacity as we've gone through this year, and we are going to ramp up capacity again as we go into next year. So these are the types of things that we manage on a daily, weekly basis. And from that standpoint, we work very closely with TSMC as well as all of our supply chain partners to ensure that we are there to meet the demand.
Well, okay. I mean, I think you've explained as much as we can. Obviously, people feel that the company is not doing as well as the beginning of the year, as the stock is now below that, which seems fatuous given the fact you do $5 billion and not $2 billion. I think it's terrific that you explained everything to us. Let the chips fall as they may. AMD CEO Lisa Su, thank you so much.
Thank you.
All right. So AMD, again, we'll have Jose join us at 10 a.m. and he'll give us a better update on what he thinks happened in the quarter. Lisa Su addressing kind of the core concerns that investors have, but again, until they show the growth rates that justify the massive market that they're going after, I don't think investors are going to give them the crazy premium, which already AMD does have a decent premium, like they're giving NVIDIA right now. And so that's why AMD down around 7% right here. Now, SMCI being down 32% doesn't help the entire semiconductor market. Dell, which is also a supplier of servers for GPUs, which is why Dell's stock is up like 70% this year, is up 7%, because right now it looks like the market's thinking, okay, if no one can trust SMCI and Dell can provide the same thing, then a lot of people are just going to go to Dell because no one's going to want to trust SMCI. For those that are just joining, this is what Ernst & Young said, which was their public accounting firm auditor on SMCI. We are resigning due to information that has recently come to our attention, which has led us to be no longer able to rely on management's and the audit committee's representations and be unwilling to associate with the financial statements prepared by management. And after concluding that we can no longer provide the audit services in accordance with applicable law or professional obligations. Basically, every time a public company releases a 10K, 8K, 10Q earnings report, it has to be audited before it goes out. That's why there is a month to 2 month delay after the quarter ends before earnings starts, because you have a lot of time where the financial statements have to be prepared in a regulatory way that matches all the requirements. And the fact that E&Y is basically saying we can no longer rely on what management is telling us and the representations of these financial statements, it means that there's something going on. There is something going on inside this company that is fishy. And I would imagine, I don't know how people buy this dip today. I mean, this is just unknown. I mean, you talk about buying the dip on CrowdStrike after the world collapsed in July. That felt more like, hey, it wasn't a maligned effort by CrowdStrike. It was a bug, which you could accept, right? Companies make mistakes. This was a big mistake, but companies make mistakes. This one doesn't feel like a mistake. This feels like it was negligence. And could it become criminal negligence? I don't know. But if it does, I don't know if anyone wants to be holding on to SMCI. So this one right here, look, I don't think it's going to go to the point where the company's bankrupt or the company doesn't exist. But at the end of the day, if Dell can do what SMCI does, Dell up another 2% as I'm talking, 7.6% right here, then I think a lot of, the market might think, hey, we can buy Dell instead of SMCI to still get the exposure that we want to get. So there you go. SMCI down 30%. Allman says it's just the financial shenanigans. Their product is still good. Correct. But in a business with relatively zero moat and horrible gross margins, financial shenanigans can end up really hurting the stock right here. And that's why Dell is up right now, because Dell's taking, or perceptually by the market, will be taking some of their market share. Different person says, I'll be their new auditor and fix everything. Don't worry, guys. That's amazing. I hope you can fix a 30% dip that we've got going on right now. All right, we got 3 minutes until the market open. I want to show you guys a quick clip, and then we got a lot of stocks looking at in the market. Google, Eli Lilly, a bunch of names that are moving right now. Masa-san, the guy who manages the $100 billion vision fund called from SoftBank in Japan, had some stuff to say about the AI market and how it's going. Keep in mind, he sold his NVIDIA for $3 billion worth of his stake when he owned 5% of the company. That stake would be worth $150 billion today. So this is his perspective on what's going on with AI. He now is heavily concentrated in ARM, which is a pseudo competitor to NVIDIA, but not really a competitor to NVIDIA.
And it will require 200 million chip. Okay, the cumulative capex, $9 trillion. $9 trillion. How do you recoup? How do you recoup? It's too much investment for many people's view. I say it's still very reasonable capex. $9 trillion is not too big, maybe too small.
You like to think big.
Yeah. So let me say, what is $9 trillion cumulative? But if the 5% of GDP in 10 years from today replaced by ASI, what is the number?
Right.
5% of global GDP is $9 trillion. $9 trillion per year. If the ASI produce you $9 trillion per year, cumulative investment of $9 trillion, small money.
All right.
Small money. You recoup in 1 year for the total cumulative. So that means $9 trillion capex investment you can depreciate. 1 year revenue, that means like 50% profit.
The reason I'm bringing this up is because he sold a lot of his NVIDIA. Now he's in ARM, and I think he needs to pump ARM to get back to the levels that he was at, or he could have been at, on NVIDIA. And, he's pumping up the AI market to be $9 trillion worth of capex a year. I don't know if that's going to happen. Maybe it does. If it does, NVIDIA is probably going to the moon. All right, 9:30 a.m. The stock market is now open. Wake your ass up. Here we go. Google opens up 6.5% on the day, adding about $110 billion of market cap, 181 on Google. Google finally breaking into the 180s after basically 3 months. The last time it touched it was around July. Up about 7%. Look, Google crushed it. Cloud was amazing. Waymo was amazing. Lots of different parts. Gemini growth was incredible in terms of 2 billion monthly active users. So you got Google right here at 181. Amazon is up 2% because of Google. Microsoft is up about 1% because of Google. Meta was just at 600. Now they were at 609 in the pre-markets. Now at 595. They are also up 1/3% because of Google. Reddit, we didn't talk about Reddit. We'll talk about them in a bit. Reddit crushed earnings, 68% revenue growth and GAAP profitability of $30 million. This is one that I completely got wrong. Didn't understand it when I IPO'd. Valuation probably was incredibly cheap if you just looked at what was going to happen over the next couple months in terms of the growth rates. Now it's up 29%. So for anyone who had Reddit, congrats. They got upgraded to 115 by B. Riley today, and they deserve it. Absolutely crushed the quarter. They deserve to get it. And you got Reddit right here up about 30% on the day. NVIDIA is down 1.4% because of this SMCI news. SMCI now down 27%. It was down 32%. So there are some people stepping in and buying the dip, and they're not believing that this accounting firm leaving is that big of a deal. But you got SMCI right here down 27%. Bitcoin 71,834, just below 72,000. Robinhood 2790, Palantir 4467, down about 0.5%. Robinhood as well, down about 0.5%. BitX down about 2%. CleanSpark down about 3.4%. SoFi, look at that. Nice recovery on SoFi. SoFi hit 1197 yesterday in the pre-markets just for a little bit. Fell all the way to 970. Now it's at 1070. If you bought the dip, we know Derek, friend of the channel, bought 110,000 shares yesterday at like 1020 or 1015. You got SoFi right here at 1074, and it's actually doing what it has never done in the past 4 quarters, which is go up the day after they go down on earnings. And even yesterday, it had a 6% recovery after falling 12%. So really nice to see that momentum on SoFi right there, 1070. Again, it was an incredible quarter. Street just had a weird reaction to it. It got upgraded across the board yesterday. And so the street also tended to think, at least the analysts that covered it, that it was a good quarter as well. MicroStrategy right here down about 3%. Snapchat up 7%. They also had a good quarter. They're profitable, more daily active users. Snapchat right here at 1170. SoFi again at 1070. Airbnb at 136. They're down about 1%. Tesla at 260. There's a new CyberCap commercial that we'll watch in a second. It looks really beautiful, and it looks like something, honestly, that's going to transform the entire ride-hailing market. So you got Tesla right there at 260. PayPal at 78. They were also down about 8% yesterday, continue to be down 2% today. Archer Aviation is up 1.34%. Oklo's up another 8%. So you got Oklo right here, nuclear energy. That one is up another 7%. Now it's up about 300% over the past month. Google right here up 7%. Where's SMCI? Is it still going down? SMCI is still indeed going down at 30%. Where's the 10-year? The 10-year, wow, yields are coming down. Okay, 10-year has some yields coming down. Mortgage rates also were down slightly today. I think at like 6.73%, but you got the 10-year at 4.23. I think it was closer to 4.32 yesterday. NVIDIA's down 1.6 on the SMCI news. SMCI goes slightly red. For those that are just joining, GDP growth came in at 2.8% versus 3% expected, which is decent. And then private payrolls from ADP came in at 233,000 versus 115,000 expected. So looks like the labor market seems to be decently strong. Microsoft up 1%. Amazon, look at that, up 2.2%. That's a hell of a move on Amazon. Amazon has not moved 2% in a while. Amazon right here at 195. Dell almost pushing 130. Google at 180. Again, SoFi at 1070. Whereas Palantir right here at 44.54. And if we look at the semiconductor plays, almost all of them are red except Dell. Wow. Look at the left-hand side of my screen. All of them are red except Dell. We'll talk about Robinhood in a little bit. I know we have earnings today. I'll do an earnings preview in a little bit, but we do have Robinhood. We'll talk about that a little later. I'll be live at 3:30 p.m. to officially start the earnings stream for Robinhood. The Bitcoin ETF inflows yesterday were crazy high. Yes. So BlackRock bought $690 million of Bitcoin. The overall ETFs bought $858 million of Bitcoin, almost $1 billion of Bitcoin by these ETFs. So ETFs definitely helped yesterday in terms of maintaining momentum for Bitcoin. ARM is down 2%. Marvell's down 1%. TSM's down 1%. Qualcomm's down 3%. SMCI down 31%. AMD, oh my God, it's down 9.7%. So it was down 7%. SMCI news didn't help. Investors are realizing that the lack of guidance makes it a little bit unattractive right here at $150. PE on AMD is 44. PE on NVIDIA is 65, but NVIDIA is growing at 100%. AMD is growing at like 15. So it's a little tough to be able to justify some of these metrics right here. Intel right here at 22.52. On Semiconductor at 73.62, down about 1.4%. And then ASML down about 3.87% on the day. Cheesecake Factory did have a great earnings yesterday. They opened up a bunch of new restaurants, beat on the top and the bottom line, raised guidance. Cheesecake Factory up 12% on the day. And so you're seeing other pockets of the stock market do well. Where's Eli Lilly? They missed on earnings this morning. They are down 12%. Yeah, they got smacked. Now, again, Eli Lilly was up almost 60% going into the print, but the miss, because the Ozempic drugs seem to be fabricated across different industries, is leading to a lack of demand, is what Eli Lilly said, in terms of them being able to meet their quarterly guidance. So they have to lower guidance. They missed on EPS, missed on revenue, and that's why you are down now 13% on Eli Lilly. Is this a buy, this Eli Lilly dip? You know, I don't know about their drug pipeline, and I know they have one of the best drug pipelines in the world, but I don't really know it or understand it. So I think it's hard to buy the dip unless you understand what do they have in the future outside of Ozempic that can create the elasticity of pricing power that they've had on things like Ozempic. And, without understanding that, I think it's hard to easily buy the dip. Eli Lilly lost $100 billion just now in the first 6 minutes of the market opening. So definitely a pretty nasty decline for Eli Lilly. Palantir right here, 44.78, again, kind of hovering around that 45.50 to 45 level, which is not too bad. Where's SoFi? Are we going back to 11 on SoFi? Are we going back to 11 SoFi? Well, look at that. Pretty incredible. Pretty freaking incredible for SoFi. Tough day yesterday, but I think towards the end of the day, people could tell it wasn't a typical SoFi dump after earnings. It was a dump, but it was a dump that had a recovery because people realized the dump was stupid. And that was the first time it's happened again in a year where people are like, no, this dump is dumb. Like this is a buy the dip opportunity. And as a result, you got the market taking it a bit higher. Fiverr had earnings as well. Fiverr is up, 24%. Looks like AI is not taking away all the freelancing jobs. Maybe AI is a tailwind for it. Fiverr revenue was $99 million, 8% year-over-year growth. Wow, the street's giving it a 25% boost on 8% year-over-year growth. That's incredible. The profitability was $1 million. Dude, they made $1 million of profit, 4 cents of EPS. Why is this thing up 25% on that? Well, oh yeah, this is why. The market cap's $1 billion. For some reason, I felt like Fiverr is like a $50 billion company. That's not the case. Okay, so Fiverr is a very small company, so putting up these types of numbers can definitely boost their momentum. So there you go. Fiverr's up 26%. Where's Transmedics, TMDX? This stock fell 30%. Wow, down another 4%. So it fell 30% yesterday, down another 4% today. Again, missed on their numbers. I still don't know if this is buy the dip. I talked to a couple people. They're super bullish, so they think this is not a structural reason that they fell. This was like a quarterly issue. Don't fully understand the story yet, so I'll be diving deeper into this, but this one right here down about 35% over the past couple of days. Fiverr could switch to AI agents and you don't actually have to use freelancers. If AI actually becomes that good where an agent can get the job done, maybe. I used ChatGPT yesterday in a couple of different ways, and it was just incredible how much time I saved. I mean, it was one of those things where it just reminds you why AI is so important. But again, if the AI gets that good to actually replace the entire process of talking to a real human, then that could be a tailwind for them. But if it's also just like a growth lever for humans to do their job more effectively on Fiverr, then that also could be beneficial for the company. Bitcoin right here at 71,600. Enovix was up yesterday as well at 1080. Enovix was down 9% during the day. Then they went up 10% after hours. So Enovix had some momentum. Nvidia actually taking a hit from SMCI. SMCI now down 34%. Market's not buying the dip. There were some people that bought the dip at like 34. They're down already on that at 32. SMCI right here down about 34%. S&P down about 0.18. Nvidia down 1.7. Again, AMD down almost 10%. Schwab, by the way, is now introducing 24-hour trading. So it looks like they got influenced by Robinhood, and now you will be able to trade 24 hours on Schwab. That was announced this morning. Robinhood, 27.91, down about 0.5% as the market opens. 34% sounds a bit excessive. I agree. It's a little off-putting when your auditor decides to leave. I mean, imagine your biggest holding right now decides that, hey, we don't want to, imagine Palantir's biggest auditor is like, yeah, we don't trust them, so we're leaving. Or Google's auditor is like, yeah, we don't trust Google. Like we kind of think they're cooking the books. It's just like one of those things where it's like there has to be a market reaction to that, and maybe it ends up being pretty excessive when you factor in. By the way, SMCI has a history of they got sued in 2020 by the SEC because they did not file forms on time. So this company does have a history of doing this stuff, and they're kind of living up to that reputation right now, which is why we're seeing some pain. Did you talk about Eli Lilly? Yes, we talked about Eli Lilly at around the 15-minute mark of the show. So we discussed them. Again, demand for their products is lowering because there are bootleg versions of their core drugs. Wow, down 14%, which is why the market's a little afraid about them hitting their guidance. And they said they're not going to hit their guidance. And, that's why the market's selling it off right here. All right. What else do we have going on right here? Oklo is still pumping. Yes, Oklo's still getting a hit right here at 10%. I mean, again, I wouldn't chase this thing, but nuclear energy is taking it to new levels. Google did say yesterday they're investing more in different energy infrastructure to be able to keep up with AI demand. If Oklo is a part of that, which we don't know yet, but if it is a part of that based on the perception that the street has, then that is something that the street's probably excited about. In terms of Google price targets, Truist says buy it 225, Bank of America says buy at 210. JP Morgan says buy at 212. Goldman Sachs buy at 208. Barclays buy at 220. Piper Sandler buy at 210. Evercore buy at 205. So all the banks pretty much raised their targets into the 200s, a little bit above the 200s. SoFi right here, almost up 5% on the day. And that may be also why the street is taking Google up now 7%. What do we have on Google? Google 5%. Okay, so selling off a little bit right here. Some people taking their profits. Amazon, are we still up 2%? Amazon's up 1.48. All right, all the Mag 7 are taking a little bit of a hit. Tesla is at 257. Where's Celsius? Celsius 3096 continuing to retain these 28 to 30 levels. SoFi, incredible recovery here. If it gets back to like 1130, it's almost like earnings really never happened. And the growth continued to stay, and the street didn't punish them too much. Amit, are you in any energy stocks? No, I'm not, but I definitely think it's something to look at as AI demand continues to grow higher. And look, I think the street wants to play AI outside of just software like Palantir or hardware like NVIDIA, and energy seems to be the next industry that's left. So that may be where a lot of the capital starts to flow. Palantir 44.34. The Bitcoin miners are getting wrecked as well. CleanSpark down 5% because Bitcoin is down 1%. Again, this 72,000 level is great for CleanSpark, but CleanSpark now, given how much time has passed since the halving event, needs like $100,000 Bitcoin. Like all these miners really need it to get to that level to be able to produce the results that people want to see out of these miners. And we might just have to be patient for that to happen for Bitcoin. Reddit's up 30%. Incredible. 32% on Reddit. Market cap is now 17 billion. They've added basically 5 billion in a day. Price to sales at 18. A bit expensive now, but again, at 50, 60, it was less expensive, just given the fact that they were on track for profitability. And the profitability is also what got the street excited. MicroStrategy right here up 5 or down 5.7% at 243. The Q's down a little bit at 497. And you got Meta right here at 593, basically flat on the day. SoFi's over 11. All right, there we go. SoFi just at that $11 level. If you bought the dip yesterday, congrats. It was a good dip buy. It was a decent dip buy for SoFi right here. And Bitcoin at 71.4, Palantir at 44.27. And you got SoFi here at 10.96. Tesla again, 256. Let me show you guys the Tesla commercial that came out yesterday for the Cybercab. I mean, it really looked pretty cool, in my opinion. And just imagining a world where this is a real thing seems like it could be pretty cool as well. So this is what we got for Cybercab. Let's pull this up right here. Is SMCI still getting hit? SMCI still at 31%. Roblox is down about 0.5%. And bonds are pumping hard. Yeah, it seems like people are selling off bonds right now. Where's the 10-year? Yeah, down about 4.2%. I mean, look, some people are calling for 4.5 on the 10-year, but if we can hover around 4.2 or get down to like 3.8, I think that would also be really bullish for stocks. All right, here's the Tesla Cybercab commercial. So let's take a look at this. Again, this was pretty incredible when you take a look at it. Now we're getting a much more in-depth view of what the Cybercab looks like. I'll talk about Wingstop in a second. I know Wingstop is getting hit as well right now. It looks pretty cool, dude. It looks pretty cool. We saw the silver version at the event. This is the gold version. The tires look like they're like toys or something. Like it looks incredible. There's no steering wheel. You can drive on. I mean, they're painting a really big utopian reality where everything's perfect and you just happen to get in the car and do whatever you want. They're not there yet. I mean, on the current Tesla with the FSD, if you like look away for 2 seconds, it'll alert you. So we're not fully there yet, but eventually we might get there. For those that are just joining, SMCI again is down because their auditor is leaving. Their auditor, Ernst & Young, is leaving because they said today in a statement they can't trust management. And that is why SMCI is down 30% right now. So there you go. Pretty exciting thing by Cybercab for Tesla. And again, Waymo growing at 150,000 paid rides a week. That was an incredible stat to me. Like when I saw that yesterday, I was like, you either interpret that as bearish Tesla because you're like Tesla is not doing any level of those rides per week like Waymo's doing, or you interpret that as Tesla's taking an Apple approach where they're collecting all the data from FSD, from all the Teslas that are driving on the road. They're collecting all those miles. They're using that miles to train their neural nets. And then when they launch a real Cybercab robotaxi network, it's going to be leaps ahead of what you could imagine Waymo's doing or what Cruise is doing. And, you know, you're not going to get 150,000 paid rides a week. You're going to get millions of paid rides a week. So that I think is the approach that Tesla's taking. And I think that makes sense because ultimately you want this to be a generational product. I think something like the iPhone that could change everything. But you need FSD to be perfect. And right now it's just not fully there yet. Google right here up 5.8% at 181. Amazon 193. Oklo 24.92. Okay, so Oklo just fell 7%. It's down 1%, but it was up 8%. So we got rid of that full 8%. And now it's flat. So you had a nasty red candle on Oklo right there. Someone sold a crap ton of Oklo at $28, which is why it just came down. S&P at 580. NVIDIA, wow, NVIDIA is actually getting hit 2.5%. I don't think NVIDIA deserves to be down because of SMCI, but NVIDIA is SMCI's largest customer. And one could make the argument, okay, wait a second. If SMCI is cooking their books, did NVIDIA know they're cooking their books? Is NVIDIA pulling forward revenue that was never real or something like? Now, granted, I feel NVIDIA's auditors would have addressed this a long time ago. So it seems like it's an SMCI specific issue, but still, the street could correlate them together, which is why you're seeing NVIDIA go down right here at 137. Dylan says Cybercab reminded me of Back to the Future 2 and the cars in the first 20 minutes of the movie. Yeah, 100%. It really does look like it's something from a movie. And that's kind of what Elon's vision has been, right? That we have this futuristic world that looks like the future. And Cybercab definitely looks like that. All right, Wingstop missed their EPS estimate. So, wow, 18% down on a Wingstop. 88 cents versus 97 is what the street wanted. Let me get some more information on that. Are people not eating chicken wings as much? Revenue increased 40%, dude, at 162 million. It's incredible growth. It's just the EPS was bad. How much up was Wingstop this year? Let's see if this was priced to perfection. Maybe that was an issue. Well, Wingstop before this 18% decline was up basically 40%. So I guess you could say if you're up 40% and you miss on your EPS by 10 cents, that warrants a 20% decline. Maybe it doesn't, but you could argue that it does. Now, one thing that's important about this is that, again, we want to see this. If companies don't hit their numbers exactly the way the street wants, we want to see them get hit. All the companies, including Palantir. Like if you don't hit the numbers that the street really wants, you deserve to get hit because the market's at an all-time high, and you cannot justify the frothiness, euphoria, or momentum to expand further into higher PE multiples unless you hit your numbers. And so I think capital being reallocated away from Wingstop and maybe into a Google today is not the worst thing in the world. Even though I don't think an 18% decline is warranted off of a 10-cent EPS miss, especially when you're growing revenues at 40%. Like that's not easy for a restaurant. But you got Wingstop right here down about 19% right now. Wingstop has had insane growth for a while. It could be just them ending the run. That's also true. I mean, 38% growth is impressive to me, but if they had 40% growth or 50% growth last quarter, that could also be a reason that the growth itself is declining, even though the growth could be good. The trajectory of it could be declining, which is bad. Mercado Libre is down 2.7%. I think they report earnings tomorrow or today. I think it might be actually next week. I'll check on that. But yeah, I don't know why they're down 2%, but they are getting a little bit of a hit right here. And then Celsius down 0.3%, Tesla down 1%, Robinhood 27.89 down about 0.5%, Palantir right here 44.37 down about 1.2% on the day. Thoughts on Lilium going bankrupt? They work with Palantir. So Palantir does not own Lilium anymore. So if they do go bankrupt, it won't affect Palantir. They are a client of Palantir, but they're a relatively small client. Stock 7 cents right now. It's down another 25% today. I don't know why it's down 25% today, but it was 48 cents on Monday. It was down 25% on Monday, or 50%. So it went to 25 cents because their German subsidiary went bankrupt. And because their German subsidiary went bankrupt, that is why the stock fell 50%. It's down another 25% today. I have no idea why. But if they do end up going bankrupt, it won't affect Palantir. But it would be a blow to the eVTOL industry. You don't want to see these companies losing business. And Lilium, I mean, like, I've actually studied the company a little bit a couple years ago when I was looking at them because they were a Palantir investment. Founder's awesome, dude. He's trying to change the world. They're trying to really build stuff. It's just hard. And they did go public in 2020, and we all know that was a very frothy time in the market. So, you got a lot of startups that probably shouldn't have gone public because they just weren't ready for the public markets. Robinhood right here at 28.02, now down about 0.06%. Right now, Josh says, Amit, please explain the 43 price to sales ratio on Palantir. I cannot explain on a quantitative metric why Palantir is worth 43 times price to sales. I don't think there's any justification to make that analysis. SoFi right here above 11. There you go. SoFi up 5% on the day. But there is a qualitative argument for why Palantir is trading at a 43 times price to sales. And that is that the thematic of AI is expected to be worth trillions, and Palantir is perceived as the software winner of that thematic. Now, look, you might hate that answer. Trust me, I've met a lot of people over the past couple of weeks that really hate that answer. But that is indeed the answer. Like, objectively, that's the answer. The answer is that people believe Palantir will grow and that price to sales ratio won't look as crazy one day if they can fit into the theme of the broader thematic. So DDI, a good friend of mine, I think we'll have him on the channel soon to talk about SoFi earnings. You guys probably know him as well. He made this comparison yesterday that Palantir and SoFi's revenue growth is almost the same. SoFi is actually currently a little better right now. Why is Palantir getting a 40 times price to sales? Basically your question that you asked in the chat, Josh. And why is SoFi getting a 4.5 times price to sales? And I think my good friend Arnie, that you guys also know, had a really good answer underneath his post. And the answer was very simple. If I can find the post, I know what his answer is, but I want to show you guys it. Can I find it right here? Yes, I can find it. Okay, so Arnie basically said, hey, look, the quality of revenue is fundamentally different. The quality of revenue is fundamentally different. So Arnie says right there is a concept called quality of revenue. And I love DDI, but I don't think he understands this. My take on this is very simple. So his argument is, look, Palantir can post 33% year-over-year growth rates. It justifies a price of sales of 40. SoFi just posted 30% year-over-year growth rate, and it can't get a price of sales of 4.5. Both have 80% gross margins. Palantir has better net income margins. What's going on here? I think the answer is very simple. SoFi, first of all, has a balance sheet risk because they have loans that can go delinquent, which is not good for a bank because that's the risk that a bank takes, which is why it trades at lower multiples. So if Bank of America is growing at a gazillion %, but they're taking on a gazillion % more risk because they're giving out a crap ton of loans that can go bad, and that's just the nature of the banking business. You have people that default on their loans, then that is a risk that has to be discounted further than the risk of a tech company that has reoccurring sticky revenues because they're producing transformational value in an organization, as we've seen through all the case studies of Palantir, and that requires qualitative due diligence. But if you believe that's the case, which via all the AIP cons, BP mentioned them on their earnings yesterday, I'll talk about that in a second, then let's assume that's true. There is a difference in quality of revenue right there. Now, does that result in a difference of a 10x price to sales from 4 to 40? You could definitely say no. But you could also say it still justifies a difference. And that difference in and of itself, I think data-driven doesn't really agree with. And my argument is like, no, you're totally reading this wrong. Like, one is a bank. One is one of the most innovative technology companies on the planet that is fitting a thematic. By the way, SoFi doesn't have a thematic outside of online banking, which is a good thematic, but it's not the AI thematic. You got NVIDIA, $3 trillion. There is a different thematic that's going on right now. And so that's what I think is a different problem there. And then the other argument, which I think is actually even bigger than the qualitative argument about the types of revenue, is Alex Karp versus Anthony Noto. Again, I'm a big fan of both of them. But when Karp speaks on CNBC, the whole world shuts up and listens. That's not the same with Noto. And that's not Noto's fault. He's talking about a bank. Karp's talking about defending the West and the ability for artificial intelligence to change the nature of automation and all these different things. And so when you have a different quality of leader that has a different subject he can speak on because the company itself is like defending Ukraine, there's a little bit more importance than just neobanking, then that will justify a narrative that also drives the price action. A lot of times in the stock market, narrative drives price more than anything. And that's how you get Palantir trading at a 40 times price of sales. So look, SoFi is probably undervalued. Palantir is probably a bit expensive right here, but I don't think it means that the divergence between the stock prices in terms of a price to sales perspective isn't justified. There's definitely a justification. Is it a 10x justification? That's up for the market to decide. But that's kind of my perspective on why we've got Palantir trading a little bit at a higher level. Derek says, thank you everyone for making me buy SoFi junk. Okay, so hold on, Derek, you bought, let's do the math. You bought 110,000 shares at what? At like, let's just assume 10.15 was your average price. So you spent 1.1 million yesterday. So now 110,000 times, where's SoFi? Let's just assume 11. SoFi 11.1. So you're up 100 grand. You're up 100 grand. Oh, that's why did I see this is why CodeStrap clowned me on Palantir Weekly when I did 10 minus 5 on the calculator. If he bought 100,000 shares at 10 and the stock's at 11, that means he made $1 times 100,000. I really did the math on this stupid new Apple AI calculator. Look at this shit. I upgraded to Apple AI last night. This is my new calculator. Don't mind the battery. I know you guys are going to kill me for the battery, but look at this. This is their AI update. You can have you have a history of your calculations. That's their AI update. I am not impressed with Apple AI. I'll tell you right now. When I talk to Siri, she doesn't even respond. For example, hi Siri. She's not even responding. She's not even responding. All she said is, "Hey, Big Papa." That's it. I don't even know why she's calling me that. Siri's being a little freaky right now, but like she's not even responding. You don't even hear her say anything. So it's really weird, dude. Like I thought it would actually talk to me. It's not talking to me right now. But we needed to get it to talk more because maybe if it can talk, it can actually say some like interesting stuff. So SoFi right here, Derek's up 100,000. If you bought the SoFi dip, you are up right now, up 5% of the day, 10.99. If you bought it at 9.70, you're up even more than that. SoFi right here breaking above $11. Roblox right here at 43. Wingstop still down 18%. Where is SMCI? Is SMCI still struggling? SMCI down 25%. All right, people bought a little bit of the dip. People bought a little bit. It was at 32%. Now it's at 25%. Yeah, Derek, here's the question. Are you selling? That's the question to Derek. Are you selling right now? Or not? Speaking setting is probably turned off for Siri. There's a setting for that. We have to all right, I guess I'll go into settings and I'll see if I have to fix that. But overall, dude, I've been using it for the past 10 hours and I don't see anything that interesting with Apple AI. Maybe they got to do more updates, but summarizing my notifications is not that interesting. It's not that exciting. Derek said he's selling. Okay, so Derek's taking some profits on this. Look, not bad. 100 grand in a day. It's nice when you have money. I guess money makes money, but this is why it's so important to like have financial independence, because money freaking makes money. At the end of the day, money can continue to compound money. So there you go. Need to support your channel. He's going to take the 100K and just give gifteds every single day. Goodness gracious, bro. Why is Reddit running? Reddit is, again, they beat revenues by 30%, or they grew revenues by 68%. That's why Reddit is up right now. 36%. Holy crap, dude. A 40% move on Reddit. A 40 freaking percent move on Reddit. That's insane. By the way, the reason Siri calls me Big Papa is so funny because in 2014, like when I set up my Siri, I made it call me Big Papa. I don't know why, dude. I guess I was like a stupid 15-year-old and I said, hey, you have to call me Big Papa. And then when I was in India, one of my aunts was like, or one of my mom's friends was like, hey, can we sync our contacts together? And I synced my contact, and you know when you put the phones together, it does that animation, and then it sent Big Papa to her, and I was like, you got to change my name right there, because I haven't synced contacts in a while. And she was like, Big Papa, huh? I was like, yeah, I was young and stupid, so I should probably change that name to like Amit right now. But that's why it said that. So SMCI is halted. Okay, SMCI is halted, down 23%. However, people did buy the dip. It was down 32%, so it had a 9% recovery. There were some people buying that dip and it got halted. Now it's suspended based on the volatility of people buying. You know what I think happened? Maybe SMCI is ready to put out some news and a bunch of algos know about it and they started buying it because SMCI is probably going to say something that's like, hey, like, we're fine. E&Y is stupid. Like, all of our audits are good, yada, yada. That's just my theory. Maybe that happens. Maybe that doesn't. But now it got suspended as the dip was getting bought. That's interesting. That's very, very interesting for what we're seeing on SMCI. That is weird, dude. I guess when it gets unhalted, if it gaps up, that means SMCI is coming out with some news and the market figured it out. The market is so quick to figure this stuff out, because otherwise, why would it go up 9%? Like, what would be the sort of justification for it to do this little U-turn that we got going on right now? Amazon 192, Google at 180, Reddit 110, Palantir 44.41. Where is the hood? Hood is at 28.23 on the day. After Jose joins the show, where he'll be joining in about 30 seconds, I will do a preview on Robinhood. I know they have their earnings today, so I'll give a little bit of my thoughts on what I expect after the bell. But we'll see what happens with Robinhood. NVIDIA right here at 139, AMD down 8%, recovering a little bit. It was down 10%. Now it's down 8%. Meta right here at 594. SMCI still halted right now. And then you have Google at 180 right here on the day. Okay, cool. Let's bring on one of our favorite contributors onto the market open. In my opinion, one of the best analysts, quite frankly, on the internet, talking about semiconductor stocks, NVIDIA, AMD, all that good stuff. Mr. Jose. Jose, what's up?
Thank you. Good morning. I'm doing pretty good. How about yourself?
I'm doing great. Jose, we got to get your reaction to this SMCI stuff. I don't think you own a ton of this, even though you own maybe a little bit of it. Do you think they're cooking the books? What do you think's going on here?
So I don't own SMCI. I mean, I think we talked about it last week, right? It was, you had to pick a side, and unfortunately, if you picked the wrong side last week, you're you're in trouble
That's
right
true.
now.
You did say, I remember that moment. You were like, you have to pick. Are you bullish or bearish? And you got to ride with the ship.
Yeah. So I mean, obviously you could wait too. But their auditor quitting is definitely scary news. I mean, no matter how you try to twist it, it just brings more uncertainty, right? And I think that's at the end of the day, that's what the market cares. It's just they want to be certain about anything, and whenever they're uncertain about anything, it just creates a lot of volatility. So pretty interesting with your little theory with what might be happening right now with that crazy 9% U-turn. I mean, it was a huge U-turn before it got halted. So pretty interesting. I mean, at the end of the day, questions I would have, I don't really know too much of how the legal works behind this, but if things like this do end up being really bad, like are they still going to be able to run production? Are they still going to be able to run their normal business? What happens during this kind of time frame? So this is something that I probably have to do a little bit more research on to see how it can impact the rest of the overall semiconductor market.
They have a history of these issues dating back a couple of years ago. Do you think that history is playing any role here?
I mean, it's dumb. If it is, it's dumb. I mean, they were in such a great place. They were really one of the best players in, even though we talked about it plenty of times in this channel where hardware is not a moat, in my opinion, right? But still, they were definitely a big player in that space. And they were doing really good. We know the AI market is super strong. So for them to be cooking numbers, it's just stupid, in my opinion. You cook numbers when things are bad. You don't cook numbers when things are good. So if it is, I just think management is dumb at the end of the day. If it is true. Obviously, we still don't know everything right now.
I agree. And it's one of those things I guess we're going to find out over the coming months. Let's talk about your second largest holding, AMD, down about 8% right now. 6.8 billion of revenue, operating income of 724 million. Lisa Su was on CNBC today, said that, hey, AI is a big market. We think we're going to expand in that market. I think they raised their fiscal year guidance from 4.5 billion to 5 billion of AI related revenues. Why is the stock down 8%? And do you think it deserves to be down 8%?
I mean, I think AMD is nowhere near the next NVIDIA. I would never say AMD is the next NVIDIA. I think what is so good right now with the AI market is supply constraint, that even second place, no matter how bad your position, how lagging you are compared to the leader, you're still going to be able to sell GPUs. So they are increasing their guidance. They did mention that in next year, it seems like they might be bringing more customers for their AI accelerators. For those that don't know, their AI GPUs are only being used by 3 players right now. It's only being used by Microsoft, by Meta Platforms, and by Oracle. No one else is using it. So there's no Amazon, there's no Google using their AI chips. They're using kind of their CPUs, but they're not using their AI accelerators. So there is that market opportunity of, hey, what happens when Amazon starts to buy our chips? What happens when Google starts to buy our MI300 or our MI325? So they still have growth opportunity there. I think the earnings were good. I mean, they're gaining in the CPU market. They're increasing their GPU solution. Their embedded market is kind of bottoming out. There's kind of muted in certain segments within that space. But overall, I'm pretty bullish in the long term for AMD, as long as you don't have the expectations that this is the next NVIDIA.
So Masa-san said today that there's going to be $9 trillion of CapEx. That's his estimates. AMD's valuation is bad compared to NVIDIA's in terms of the level of growth. However, if CapEx is really going to 9 trillion or maybe 4 trillion, whatever it's going to, do you think AMD is just part of that movement? And even if their chips are a year behind Blackwell and Hopper, they're going to benefit because there's just that much demand?
Yep, I think so. I think at the end of the day, because you're in a supply constraint market, even being second best, you'll be able to sell chips because people are going to want chips to be able to improve their solutions. Even if they don't have the best, they'll rather have a second place than no place at all. So if the market continues to be supply constrained, and we've heard from TSMC that at least for the next year, we're going to continue to see that. We heard from NVIDIA's past that they're sold out on their Blackwell platforms as well. So to me, if you don't have the Blackwell, you're going to say, hey, look, what can I get my hands into? Can I get the MI300? And if AMD has capacity, then they will be able to grow with the market.
Right. That's fair. It makes sense. Let's talk about Google. Google is a big player in the AI space. They had a lot of comments around CapEx, AI. Gemini has 2 billion users. Cloud is growing at 35%, probably led by AI workloads. What was your perspective, and does this keep you bullish on the overall AI sector?
Oh, for sure. Google is probably my favorite earnings yesterday, they did mention that 25% of all new code at Google is built by AI.
I did see that. Yeah, with
That
with an AI assistant. Correct.
I think that's insane. I mean, eventually that's going to go up to 30, 50%. So it's just showcasing a real big tech company using it for their everyday usage. So I think Google did pretty good with that. Google did mention that capital expenditure was going to be flat to Q2, which is $13 billion. That's also flat from Q1. Q1 was also $13 billion. And some investors might be saying, hey, look, Jose, that's already bad news for NVIDIA because they're not increasing CapEx. A few notes that I have for there. First, they did mention for 2025, they are already expecting to increase CapEx versus 2024. So you are seeing that growth there. The second thing is 13 billion per quarter is insane. Just a year ago, these companies were spending less than $8, maybe even less than $7 billion per quarter. So we've seen kind of like 100% growth in CapEx. So I don't think every NVIDIA investor is expecting growth like that on every sequential basis, right? So it makes no sense. The end of the day too is, right, chips are supply constrained.
Correct.
So if you don't have enough chips, no matter if you want to spend more money, you physically can't because there's no chips out there to sell to you. So CapEx flattening out is not necessarily bad to me. At least for these sequential and kind of very high numbers, because at the end of the day, like I mentioned, supply constraint is preventing these big players from spending even more and more money.
So, and they did say they're going to spend more in 2025, right? And so, yeah, it seems like that.
Which goes in line with what TSMC said, that they're going to improve their capacity as the time progresses. So it makes sense that that's how the flow of CapEx should go as well.
Right. So we've got HIMS, folks. We'll talk about that in a bit, but that's down about 10%, probably off that Eli Lilly news. AMD is now down 8.72%. SMCI down 24%. Again, a little bit of a recovery there, but still down. Okay, so AMD had decent numbers, not amazing numbers. Google had pretty incredible numbers. NVIDIA is coming up on November 20th. Did you get any signal from Google or AMD around what you think will happen with Blackwell and NVIDIA?
Blackwell is still way ahead of the competition. One thing that I did hear from AMD, there was an analyst that asked Lisa Su where most of their revenue is coming from, either training or inference. Lisa Su mentioned that is pretty much all inference. So that means that the only player that you have out there for training, and this is what all these right, XAI just mentioned that they're going to double their 100,000 or 200,000 GPU. The only one that can be used for training right now is NVIDIA. And that's where all the big money, that's where you have those 100, 200, and future 1 million clusters being built. So at the moment, nothing. I think to me, the most important earnings this week is going to be Microsoft, because Microsoft is reportedly the biggest customer for Blackwell so far. There are reports that Microsoft is purchasing almost 4 times more Blackwell than any other cloud provider out there. So for me, Microsoft is going to be the most important player out there.
So you're watching out today. So, all right. So last question for you. What are you watching out today from Microsoft and Meta that are
so for Microsoft, very, very important about their CapEx. I think Microsoft is one that's, I would expect a sequential growth in CapEx. And just to hear them talk more about how AI solutions and AI infrastructure is being built. Obviously, they're going to talk a lot about AI. Maybe they might share some tidbits like Google did with 25% of code being built now with AI. Maybe they might share some tidbits there, but I'm really excited about their CapEx. Maybe sequential growth there.
All right. I love it. Jose, thank you for joining once again. We really appreciate you every time coming onto the show. We got Jose's YouTube right here, Jose's Twitter as well in the chat. Again, if you guys are curious about the semiconductor space, I mean, he has a great community on YouTube that really relies on him every day for this information. So please make sure to check him out. Jose,
appreciate it. Have a good day, man.
Yep. See you next time. Bye-bye. All right. So that's what we got in the context of the semis. Robbing the Hood is running right now. 28.51 up 1.72%. I think we're getting a little bit of a pre-earnings pump on Hood. Maybe I should do my earnings preview right now. I'll spend about 10-15 minutes, go through kind of the numbers that I'm looking at. But yeah, this is actually really interesting on Hood because Bitcoin's not pumping right now, right? Bitcoin is, it's a little bit of pump. It went from 71.4 to 72. But you got Hood right here at 28.47. So I did buy Hood last night on the 24-hour markets. I was looking at it. I think I bought 25 shares at 28.42, 28.43. And I was going to buy more shares today because I thought it would dip a little bit, but It did at like 27.90, but I just didn't get the chance to do it. But so why am I buying shares at 28.40? Honestly, it's because I think they're going to have a hell of a quarter. That does not mean the stock is going to reflect a hell of a quarter, given they run up a lot going into the print. However, it could mean that they also have what I think is a Reddit type of quarter. So let's get into the hood preview. Here's what I'm thinking about right now. I think there's two ways that Robinhood can perform after the bell today. Either they have a Reddit level growth quarter. Reddit's up 30%. I don't think Hood will be up 30%, but I think even Hood going up 10%, given it's already up 120%, would be a Reddit type of quarter, in my opinion, because it has a monster growth earnings that reflects in the percentage gain of the stock based on it already being up too much. So that's what one thing I think could happen. The more likely thing that's going to happen on Robinhood is that it's going to fall probably to 26 because the numbers are going to be good, but the numbers might not be so crazy. And because the stock's already up so much, you're going to have about 7 to 8% of volatility, which gets us back to 26. I think at 26 it's a buy. I think at 28 it's a buy. Ultimately, I think the stock getting closer to 34, 35 towards the beginning of next year. So that's why, to me, it's either of those levels, it's okay. But I think that's more likely to happen. Now, why do I think that's likely to happen? Well, I think Robinhood is again, when we do conservative estimates on their earnings growth, and again, I did this long post on Twitter. I'll put it in the chat. You get 40% growth. The street's expecting 658 million. I looked at it last night. Originally, the street was expecting 654 million. So they increased their revenue estimates, which is a good thing and a bad thing. It's a good thing because that means the street's becoming more bullish. It's a bad thing if you miss those numbers, because then the street's like, all right, so we shouldn't have been this bullish, and then they sell off the stock. I don't think Robinhood's missing earnings. And even when you factor in pretty conservative estimates on options, equities, trading, margin balances, cash sweep, their interest on their cash and segregated deposits, you get to about 655 to 660 million of revenue, which is 41 to 42% growth. If it's a little bit lower than that, then you're looking at 38, 39% growth, which is still incredible. And so for me, I didn't feel bad buying it at 25 and 26, although it felt like you were buying the top. I just wanted more shares, and now it's running to 28.45. I kind of don't care if I bought it at 26.30 or 25.70. I'm just happy that I have more shares and a larger position in the portfolio itself, which is why I bought last night at 28.45. It was only 20 shares, but I was like, you know what? Let's just get some more shares in here before earnings. Now, here's the wild card. If there is a world where options in September actually increase 20%, or let's call it increase 10%, equities increase 10%, crypto increase 10%, margin balances, which I left flat in my valuation model, goes up 10% like it was last quarter. Their cash sweep gets, close to 2 billion or 1.5 billion in increased deposits, which I, again, am factoring as flat in my model. This is why I'm so confident. I factored in such conservative assumptions, and we still get 40% growth. So anything that's above my assumptions, which are all conservative, we should have a crazy quarter, like a crazy freaking quarter, a quarter that's closer to maybe $680 to $690 million of revenue. Again, I don't think that's going to happen, but there is a chance that does happen given how conservative I was. And if that's the case, I think the street gets excited. One thing I've also learned in a bull market this year, and I learned it with Palantir, is that just because the stock has gone up a lot doesn't mean it can't go up higher, right? Just because a stock has gone up doesn't mean it can't go higher. And unfortunately, with Palantir at 30, 34, 35, I wasn't buying as much because I was just like, you know what? The valuation's getting up there and I should chill out. When in reality, what I should have been doing is buying into strength. Now, maybe in Q3, we get an opportunity to buy back at 34, 35. We'll see what happens. But sometimes buying into strength isn't the worst thing in the world, especially when the valuation makes sense. And on Robinhood, the valuation does make sense. $25 billion market cap, $5 billion in cash, $20 billion enterprise value growing at 40%, EBITDA multiple that is well below what it historically should be for companies that are growing at 40%. And you've got shares that are reducing because the company's buying back their stock. So the EPS estimates should be good as well. That's another wild card. If they bought back like 10 million shares at $15, which I don't think they did, but imagine they did. I mean, dude, you're taking off 10 million shares off the total shares outstanding, divided by a healthy net income that you get. That's going to be a decent EPS beat that the algos are just going to love when it comes out. I think the street wants them to do like 15 cents or 20 cents. They might end up doing 25 to 30 cents based on how many shares they bought back. Another wild card is crypto. In September, the crypto markets were relatively flattish, but there was some momentum at the end. So if crypto ticked up in September, you had more retail participation. They did increase the spread. They take about 0.50% of the spread. They used to do 0.35%. So that increase of the spread could be offsetting some of the decrease in the volumes, which is a good thing. And the biggest thing that we're not mentioning is that the Fed lowered rates. The Fed lowered rates by 50 basis points. If the Fed lowered rates by 50 basis points, then that could have created a ton of new transaction volumes, because a lot of money that was stuck in those Robinhood accounts collecting 5% probably entered into the market. And if they went into the options market, the derivatives market, Robinhood made a lot of money. SoFi right here at 1108, up about 5% on the day, which is amazing that we got on SoFi. And we've got some momentum right here as SoFi goes up about 8%. Arnie says the only bear case I see for Hood is the fact that you are still using Webull. That is true. That is true. Their Legend product, which the other thing I didn't talk about, Legend Index Future Options. None of that stuff matters for Q3 because it's not even out yet. But, you know, the street will probably ask them about those products. And if on the call, they're like, hey, yeah, we think there's a lot of growth baked into these products. By the way, Mizuho raised their price target from 24 to 29 on Robinhood, which is another upgrade that it got, which was a good thing as well. So Legend does have to get better. It's not built for streaming, but eventually when it is built for streaming, it's something that I could probably use on the show. Anyone selling covered calls on Hood going into earnings? So I am not selling covered calls on Hood. I kind of think that Hood is going to go higher. I mean, look, that's what I feel. I'm a little biased here, but hopefully I presented enough objective analysis that I can. If it doesn't, I think it's a very simple buy the dip, because unless there's something that was really bad this quarter, which I can't foresee in my estimations, getting to buy back at 25 or 26, given the trajectory of it, I think is going to be good. Also, Bitcoin's another wild card. I mean, again, if Bitcoin does hit that 90,000 level by the end of the year, or even into January, February, that's just a lot of more volumes going into Robinhood. So overall, I'm bullish. I'll be live at 3:30. We'll discuss more in depth in terms of net deposits, all that good stuff. But at the end of the day, I think it's going to be a hell of a quarter for them. I think they're going to outperform, and I think Vlad's going to do it again. I think he has the visionary skills to kind of look at what the product future looks like and how they can map their execution against that product future. And if they can keep working towards that, then hopefully the market can continue to reward them. Kind of looking like Pouncer before it's crazy run. That's another thing, dude. Even the charts, the cup and handles are so beautiful. Such beautiful cup and handles. It's like now that I'm getting into TA, I'm actually trying to like recognize these cup and handles, and it's actually phenomenal. Their cup and handle. Pouncer still has a nice cup and handle, which is not too bad, but it's got to kind of maintain above that 44.50 level. But Robinhood at 28.30, I mean, I don't know if there's a 45 move like Pouncer did, but a move to 33, 34, I don't think is crazy, just given their growth and momentum, and maybe there's a chance they can get there. Do you think Hood will announce a mass release of the credit card? No. I think Robinhood's being very conservative on the credit card, which is a good thing. It's not going to be a mass release. It's probably going to be well into 2025 where they're releasing all those credit cards. So I think, unfortunately, people are just going to have to wait. But again, no one else is giving you 3% cash back on everything. So it's not like there's any competition. So they can take their time and do it properly, because they're not going to lose any customers, because, as soon as they give you 3% cash back, most people are probably going to switch to their card. Amid, why is IWM up? That's a good question. Are small caps outperforming? Small caps up 1.15. S&P is up 0.16. So I guess small caps are up because the job growth was good this morning from the private payrolls. That could say that people have money, they're spending, no recession, very good for small caps. Technically, that means there's a lower chance of a rate cut, which we saw in the probabilities, which is not good for small caps. But the fact that there's still a 96% chance, the market probably doesn't really care that much about job growth in relation to not getting more rate cuts. 10 years dropping as well, correct. And that's good. The Fed wants to see those 10-year yields drop. We're at 4.2 right now. Very important for those yields to come down. And it looks like those yields are coming down right now, which is important. Okay, going back to SMCI. So again, that is my Robinhood preview. I will talk back at 3:30. I'll be live. We'll go even deeper into Robinhood. And then at 4 p.m., we get the results. On top of that, we get Microsoft and Meta, which are going to be really big. So there's going to be a lot of stuff to cover going into the earnings today for the market close. SMCI was down 34%. Now it's down 27%. So it was halted on the way up, but it's not like it's continuing to get bought up. You're still seeing some sellers right here as it's at 35, down 27.8%. So it seems like the market's still a little confused. The market's obviously bearish SMCI right now, but they were more bearish about 20 minutes ago. Where is HIMS? So HIMS was down 9% on the Lilly news. It hit 1980. Now it rebounded to 20.72. Now it's down 6.8%. So a lot of people ended up buying that dip because they were like, that feels kind of stupid. JetBlue's down another 3%. They were down 15% yesterday. That's an 18% decline over the past couple of days. United Airlines is up 1.2%. Pfizer's up 0.2%. Cruise Line's down about 1% on the day. Gold is up a little bit. Gold hitting all-time highs again. Delta Airlines at 58.09. The home builders are getting a little bit of a rebound today. They were down about 10% yesterday. ITB, the home building ETF, was down about 7%. Now it's up 1.4%, probably because mortgage rates came down this morning. And the S&P at 582. So SoFi 1111. Look at that, up 6%. Not too bad, man. Not too bad at all for SoFi. If you bought the dip on SoFi or sold puts on SoFi yesterday, you made some money. You made some money on SoFi. Same beautiful chart with Rocket Lab and Unity. We haven't looked at Unity in a while. Rocket Lab, I agree. Rocket Lab also has a pretty nice chart. Where's Unity? Unity 21.22 up 2.34%. Where is RKLB 11.53? I was looking at the covered call premiums on Rocket Lab. They're getting a lot better. And that's good because as someone who wants to potentially wheel it, if I buy a couple thousand shares, I would like to sell covered calls on it. And the covered calls at like $12.50 were actually not bad. And usually, I remember when it was like $7, I looked at the premiums and it was disgusting. There was like no one buying calls. Now there's more people excited about space. So that's another thing that's good when your stock gets a little bit of a pump. You get more people excited from the options perspective to engage in it. And that just brings more money to it. Bitcoin 72.2, S&P 582, SoFi 1114. Look at that, a 7% day. Almost as if yesterday didn't happen. I know it pumped to 1190 yesterday, but that was fake. I mean, that was like for 5 seconds and then it came back down. Pretty much regaining everything it lost yesterday, which is not bad at all for SoFi. Let's check the options on SoFi. 81 cents. All right, so we're back to up 130% on those options for SoFi. Yesterday we were up 82%. Now we're up 130%. And I mean, dude, financials seem like they're ready for 2025. Whether Trump or Harris wins, I do think if Trump wins, there is a bit of a tailwind for financials. But even if he doesn't, rates are coming down. Financials should do good. Might be a little bit of a mistake to trim SoFi right now, whether you got options, puts, anything. That's like one of those things where you kind of let that play out. Definitely after the election. I feel like a lot of these things you wait till. Now, there's a risk until waiting. But if you think that it's a macro tailwind for the entire year of 2025 when it comes to financials, then maybe you kind of just see how you can ride it out. Can you check resistance for SoFi? Yes. So we're looking for $12, right? We want to get greedy on SoFi. Let's do 1150 first. Let's be a little less greedy. 1150, we got 107,000 shares. Again, that number doesn't scare me. SoFi has so much volume and there's so many shares moving between pennies of this stock. So 107,000 is a lot, but it's not crazy. And then at $12, you've got 197,000 shares. So you're going to need some buyers to step in, but it's not crazy to see it getting that momentum. Dell is up 7% still because of SMCI. Yep, Dell getting a bit of a tailwind right there. Up 6.75%. SMCI continues to be down off that auditing report that came out today, down about 27% right now. All right, what else do we've got going on? Let's see some headlines. Do you guys have any crazy headlines that you're looking at? What headlines? Oh, JD Vance is doing Joe Rogan's podcast. So that'll be happening today. I can't believe the election's coming up in 5 days, bro. I did vote yesterday. I did my civic duty. And I voted. It was really quick. It was like 2 minutes. I went to a senior center we have near my house, and I voted. I did what I had to do. So it was very quick, simple process. I did have to show ID. I did have to show my license, but it was pretty quick and got the job done. So it's kind of crazy because Tom Lee and all these people are saying expect market volatility before the election. It's been to the upside. Now look, we have 5 days left. It could still go to the downside. You still could get a ton of jitters going into the election. However, Q3 earnings has been so good, like just so strong across most companies that I think that's why the market continues to maintain momentum. SoFi right here, 11.17 now as we get SoFi going higher. I will not say who I voted for. That is a personal reflection that I will keep to myself. But I do encourage everyone to vote if you're in the United States. It is very important. I was actually doing a podcast yesterday with someone that you guys are going to see on Thursday night. I really think you're going to enjoy this podcast. It's 30 minutes. And if you listen to it with zero distractions, like don't listen to it in the background, like actually listen to it, you are going to fall more in love with the person that I think all of you are already in love with in terms of his speaking ability to pontificate about the nature of, I'm not going to say the topic because it might give it away, but the nature of something that he talks about. And in that discussion, we talked about voting and why Americans take the right to vote for granted. It doesn't matter who you vote for, but the fact that people literally died for us to have the ability to cast our ballot in a democratic process. It's one of those things that you just can't ignore, And by the way, in 2016, I was one of those guys that was like, screw voting, it's stupid, the system's messed up, yada, yada. You can have that perspective, but I think as you go older, you realize like it is important to participate in the civic duty that is democracy. So I did vote, and I think you guys are going to enjoy this podcast. I think you guys will definitely enjoy this podcast. A lot of you guys said that I wrote in Alex Karp's name. You'll never know. You'll never know. You will never know. Maybe that happened. Thomas said, I forgot to mention my dream last night had a cyber cab and had a live interview with Karp for a Mitt. I'm very happy that I'm entering into your guys' subconsciousness to the point where I'm in your dreams. That really makes me happy. And it's not that weird, by the way. Like, I've had dreams about people that are in my life as well, because if it's part of your subconscious, if you're listening to them on Wow SoFi 1120, if you're listening to them, if you're hearing them speak, if you're watching their videos, they end up like, I've had a dream about Karp. I'm not afraid to admit it. He's been in my dreams before. It is what it is. You watch like 17,000 hours of interviews with the guy. He'll pop up in your dreams sometimes. So I'm happy. I'm happy that's happening. All right, let's see what other headlines that we have going on. Dell right here at 130. Dell's really picking up the slack from SMCI. Rocket Lab also up about 1%, and SoFi getting that love at 1119 right now, rebounding. S&P at 582. You got Robin at 2838. Where's Palantir? Palantir 44.55. Palantir down about 1% or down 0.5% on the day, and then you got IWM at 224 right now. S&P at 582. Where's PayPal? PayPal rebounding a little bit. PayPal 79. Down about 1.36%. So PayPal is down as well. It was like Amit went on a stage and he was just smiling, and then Karp walked out and everyone went nuts. That'd be crazy, dude. Imagine we get to do a live audience interview one day with Karp and I get to like moderate a panel or something. That would be pretty cool. Amit, do you sell Hood January 15 leaps before earnings up 400%? Good question. Personally, if I had those, I would wait till after earnings, because I think earnings is going to be good. And even if earnings gets a pullback, I wouldn't get scared. I would kind of let November, December play out. So, I mean, look, my question is, no, you're really deep in the money. For those Hood leaps to go wrong, they're not $27 leaps, they're $15 leaps. So you would really have to see a big re-rating of the stock for those deep in the money leaps to go down. But you're up 400%. You won, right? And if you just don't want it, a lot of times it's also important to just not be greedy. Take out your initial. If you won, you're up 4x. And you're deep in the money and you don't need to take the additional risk, then sell half of them and keep the other half, right? But in general, I don't think Hood goes back to 15 by the end of this year. So I think those should be okay. SoFi might have a squeeze chance one of these days, but we've been saying that for a while. Yeah, but look, maybe it's happening. I mean, look, this is not good for the shorts. This is not good for the people that doubled down on their short yesterday, thinking they were smarter than the market because it was down 10%. Already they were down on the shorts intraday. Now they're probably underwater on the shorts as SoFi's at 1120. So it's one of those things where if the shorts are like, oh, this is actually like a story that's becoming real and it's not just a stock that we can toy around with anymore. I mean, maybe that gets them to cover. And maybe they need to see 1150 to really feel the pain. But if they wait till 12 or 1250 and then you get a squeeze maybe to like 15, I mean, there is a world in which that could happen. The question is just how confident are the shorts on these numbers right now. Is Tesla moving? Where's Tesla? SoFi is moving as well, 1123. Tesla 262. Nice to see Tesla up about 1%. SoFi up 7.2% right here on the day. CrowdStrike. Where is CrowdStrike? CrowdStrike 313. CrowdStrike as well. Got re-rated, fell all the way to 192 after their disaster, and now right back to 313. CrowdStrike, by the way, I know people hate Palantir's PE. Palantir's PE is 220. CrowdStrike's PE is 458. So a lot of people forget that stocks can be expensive for a long time, and as CrowdStrike grows, that PE will continue to come down. But that just can't be the only metric we look at when it comes to these tech companies, especially if they have a moat. And I felt like I was the only one saying CrowdStrike had a moat when everyone was saying, do you know the amount of, if you just type in a ticker symbol CRWD and my Twitter @name on Twitter search, if you just read the comments under those posts, the amount of people, a lot of Palantir bulls, by the way, were like, CrowdStrike's dead. I'm just like, wait a second, like, what are you talking about? Like this is a bad mistake, but being dead, it's a dead company, really? Like, I didn't see that, And so, and again, if you use the same valuation metric they use on Palantir and CrowdStrike, and you come to the same conclusion that it's overvalued, it's hard to come to that conclusion if the company has a moat. And I think for CrowdStrike, they had a moat. SoFi 1121, SMCI still down 27%. Dell right here, down about 7.3% right here as well. CrowdStrike forward PE is cheaper. That's fair. That is fair. But still, I mean, it's an expensive stock, and it's always been an expensive stock. And when it was at 350, it was even more expensive, right? So it has been able to get to those levels. Bitcoin 72,150. Please, thoughts on Fubo? I'm not a fan of Fubo. I do think there's an interesting argument in the streaming space, but Not a fan of them. I think, Disney, Netflix, still too much competition. I don't know, dude. It's a penny stock. It could probably run because of how cheap it is in terms of its market cap and its momentum that it may get on good earnings. I personally am not excited about this one. They're not profitable yet, so if they introduce a GAAP profitability soon, maybe that takes them over the edge as well. I think they won a lawsuit against Disney around sports streaming, so that's something that they have for them. But I just think there's other opportunities as well in the market. Never been that excited about Fubo. Tesla went up at the 10:30 sell-off. Are we past 10:30? Oh no, we just entered 10:30. All right, folks, we got to survive the next 15 minutes and kind of see if we can get through the sell-off. SoFi 1124. SoFi is also saying screw this sell-off. Tesla saying screw the sell-off. Robinhood saying screw the sell-off at 2840. Google at 180. Bitcoin at 72. S&P going higher, and IWM going down a little bit, but still green on the day. So sell-off at 10:30 not necessarily affecting too much. Was Fubo from Chamath? I don't know. Was Fubo from Chamath? Put in the chat. Was it? I actually don't know. I feel like it was, but I also think it wasn't. I know SoFi and Open Door were from Chamath. SoFi's got to be Chamath's best IPO. I feel like it's going to have to be his best IPO. I would imagine it is. There's no way the other IPOs outperform SoFi. So SoFi is the only one that's actually growing out of the ones that they're growing at 30%. They're an actual growing company. So I would imagine this one ends up being the big one for him. I still think he owns 85% of his stake. I don't think he's fully sold out of it. He sold a bunch in 2021, but I still think he owns a decent amount of it. Bet Amit changes Siri's voice commands to Alex Karp. Dude, that would be funny. That would be cool, dude. They have to introduce new voices because if you could pick your voice, I think Meta. Oh, by the way, did you guys see that article that Meta is working on a new search engine to go against Google? So it's going to be like an AI-oriented engine that has different characters that like help you find the news and stuff. It's interesting. I don't think they're taking away much from Google, but again, it's one of those arguments that, hey, there's another way to search, which is potentially chipping at Google. But until we see it live in action, we're not going to know. And Zucks will probably talk about that on the call today, at least to an extent, in terms of their AI products. I think Meta's going to crush today. I think Meta's going to crush. Election advertising, Google did say on YouTube in particular, was really good in Q3. And if that's the case, then Meta's probably going to get a tailwind. Also, by the way, we forgot to mention some big piece of news yesterday. Elon Musk's XAI is raising at a $40 billion valuation. They are in talks with investors to raise at a $40 billion valuation. The previous funding round was at $6 billion. So we went from $6 billion now to, at $24 billion. They raised $6 billion. Now the valuation is closer to $40 billion, which is very important because that means a lot of money is going to NVIDIA because they're going to raise probably another $5 billion to buy GPUs. By the way, a couple of days ago, NVIDIA announced that XAI is doubling their capacity in their Colossus supercluster to 200,000 Hopper GPUs from 100,000. So that's a doubling of GPUs, which is massive. That's probably why they're raising a lot more money right here. So that's important for XAI. That's important for NVIDIA, and that's important for the broader sector when it comes to AI in general. So it just means that the world is moving fast. XAI will now be worth half or a little bit more than half of what OpenAI is worth at $150 billion. But you've got valuations that are ready to be given to these companies, given they're producing some of their growth. And then you had this BP news, which was also really interesting. So BP on their earnings yesterday, what they said about Palantir, here's their full statement. The advent of the next generation of AI is allowing us to once again team up with our partner Palantir to take this to the next level. AI boot camps have already been held with our engineers and use cases are being progressed. Already, we can see ways to drive meaningful improvement in efficiency across many of our core engineering processes. Additionally, we are working with Palantir and teaming up with Infosys to accelerate the digitization of our refining operations. We will update you on this progress as we move forward, meaning the AI boot camps have a real moat with one of the partners that they signed a 5-year extension with, which is Palantir. And BP, which is also very important. So you've got BP saying, hey, Palantir's AI is real. You've got XAI saying we need to buy another 100,000 GPUs and we're going to raise at a doubling of our valuation or close to a doubling of our valuation that we did from 4 months ago. And then you got NVIDIA saying the demand for Blackwell is insane. All of that stuff comes together to create the argument that AI, again, just doesn't feel like it's a bubble. It feels like there's real demand being put behind it. And obviously that'll result in some companies getting momentum. SoFi 1127. So now we got to see if SoFi can break 1130. That would be really good for SoFi, up 7.5% on the day. Pretty incredible. If Elon turns Twitter X around and makes money on it, all those haters are going to lose their minds. I can't wait. I think he will. I'm so bullish on X. I know right now it's struggling, but I think if they just keep doing what they're going to do in terms of growth and AI-enabled opportunities like Grok and more free speech. Now, the problem is the advertising goes down, so they got to figure out how to balance that. But I think in 10 years, it's worth more than $44 billion, which is what he paid for it. That now, maybe it's not worth significantly more because I don't know if they'll ever have 1 billion users like TikTok and Instagram. But if they can get there, or even get close to 1 billion, then I think it's worth more than $44 billion. So it's one of those things that Elon's going to have to pull off over the next decade. Robinhood right here at 28.36, IWM at 223, S&P at 582. Palantir still flat on the day. Markets going relatively green. Palantir down about 1% again. We got earnings on Palantir next week. Earnings for Palantir is on Monday, and then the election's on Tuesday, which is going to be wild, bro. Because, A, we have no idea what's going to happen on earnings for Palantir. B, the election is going to be one of those things where maybe it affects Palantir, maybe it doesn't. When I was on the podcast with Gali yesterday, he did say that he thinks JD Vance is bullish for Palantir. Look, I don't think this thesis is that big of a deal about JD Vance being bullish for Palantir. I think Palantir will do fine in any administration, but it's hard to ignore the fact that the vice president is literal boys with the co-founder of a company that has 50% of their business coming from the government. That is at least open to listening to his mentor, his guy, the person who funded his campaign for Senate 5 years ago, about how inefficient the government is and how they need to upgrade their tech stack in order to compete with China, Russia, et cetera, and just overall be more efficient. It's one of those things where you're like, dude, I mean, it's a tailwind that can't be ignored. I don't know if the market is pricing that in. I don't know if the market cares about that, but it's one thing as Palantir investors, we definitely have to keep an eye on it in terms of what's happening. Wow, Reddit's up 40%. Goodness gracious, dude. This is, again, because of 68% revenue growth and GAAP profitability. I don't think Robinhood can create a surprise today that's worth going up 40%. But if they can have somewhat of a surprise in terms of growth that the market really didn't see coming, because the market obviously did not see this coming, I would imagine, you're going to get Robinhood maybe up 10, 20% today. But they've got to really move. Again, they don't usually move on earnings, which is another thing. They're not that volatile on earnings, so that's another reason I wouldn't expect it. But they got to put up some really strong growth like Reddit, or at least growth that the market's not expecting to get that. Dude, Reddit up 40% is crazy, bro. Any stock being up 40% in a day is not easy. This is also now, it's not the smallest company. Now it's almost a $20 billion company. Yesterday it was like a $12 billion company. So it's getting up there, at least in terms of the overall size. What does Reddit do other than sell ads? No, they pretty much sell ads. Yesterday I thought a majority of the revenue from the $368 million they generated was coming from giving it to Google and Microsoft for AI data training. I was wrong. $315 million out of the $350 million they generated was advertising. So they're selling ads. That's it. They're selling ads, but their growth of selling ads is incredible. At this point, it is a 68% growth rate with a 40% increase in daily active users and GAAP profitability. So the street's like, well, there's not that many opportunities in the market yet. Something that was relatively undervalued for the premium on the growth they're getting. And now they're getting a real premium on the growth because they're showing that growth, which again, should be happening in the stock market. If you show incredible growth, you should be rewarded from the liquidity that the stock market provides. And if you don't, you should be punished. And we're seeing the market act congruent in that manner. Whereas in 2021, the market was not acting congruent. The market would give money to anything that was showing anything in terms of any level of growth, which was unhealthy. And I think this seems a little bit more healthy. Lee says, what sort of earnings would Palantir have to do to go up 40%? I think, so to get to $65. Yeah, I think for them to go from 45 to 65, which means the market cap would be 140 billion. Let's call it 150, 145-ish. We're looking at 50% growth, I would imagine. It has to be 50% growth. Like there's no, I don't even know if we do like 35% growth till we get that. If we get 35% growth, I think we hold these levels, maybe make our way to 50. We'll have to see kind of how the street reacts to it. I'm expecting 30% growth. I'm not expecting 35. I want to keep the expectations low. They guided for 25%. So already they guided relatively low. But we would need like 50. We would need one of those NVIDIA quarters to gap up to 65, which I don't know if that's happening. Where's SoFi? Nice job not grabbing the calculator. All right, Matthias, you're being funny. You're being funny. Dude, I'm so mad, bro. Like he bought 100,000 shares at 10. Stock's 11. You don't need to do the math to subtract 11 minus 10 and multiply that by 100. As soon as I got the answer, it reminded, dude, on Palantir Weekly 2 years ago, I did 10 plus 5, and CodeStrap does not let me live it down. Oh, SoFi's falling. All right, so 1128 to 1115. The 1030 slam got SoFi at about 1035. So down from 1130 to 1115. That's okay. Still above 11 is a good thing. And still getting some momentum. Up about 7%. SoFi is making the move yesterday that it should have made, or today that it should have made yesterday. Yeah, pretty much. Market was emotional yesterday, but market's not being too crazy right now. In my opinion, you have to own Palantir even if it doesn't make money. It gives me Tesla during vibes where people are going to buy it no matter what. Yeah, I think that's fair. Look, I think a lot of people are buying Palantir that don't really know what Palantir does, and they're buying it on a thematic. And is that unhealthy? Yes, but is that also part of what happens when you become a stock that captures the imagination of the world? Yes. And as a result, that creates a premium on the growth that the market's willing to pay for. Now, look, Tesla has had many drawdowns. I've publicly said I don't think Palantir is going to have a drawdown like Tesla had, which was, call it 50%. I could be wrong on that. I think the max pain is around 33, 34, which is about 18% drawdown about 30, 35% drawdown. Getting into the low 20s, 24, 25, that's more 50% drawdown. I don't personally think that's happening. I could be wrong, but I don't know if it's going to have that Tesla moment. And I went through a couple weeks ago why I don't think it's going to have that Tesla moment. One of the main reasons is rates are coming down. Tesla was $1 trillion when rates were 0. Rates went to 5%. You can't hold that multiple when people can't buy cars because rates are going up, and that's your business. It's a car business. So Palantir is, I think, in a different era of its life cycle. But they're going to have to put up the growth. If they don't put up the growth, I'm going to be wrong about this. They're going to have to put up the growth, and if they do, I think the street's going to be excited. Tesla 262, Palantir 4460, Rocket Lab 1150, Hood 2840, Google 179, Bitcoin 72,353 on the day. Chris CRM says, I would never buy Palantir if it wasn't making money. Vibes or not, it's growing fast, has products that clients want, throws off cash, and is the future. That's why I buy and hold. Yeah, that's fair. That is very fair. Look, their balance sheet is also amazing, dude. $4 billion in debt, no cash. They're going to do close to $1 billion of free cash flow this year. Like, I know the price of sales is a little bit up there. PE is obviously up there, even though PE is a skewed metric because it's like they just turned profitable. So it's not really the best metric to kind of look at. But the balance sheet is pristine. And I'm curious how many shares they bought back this quarter. That's another thing I'm curious about because they bought back 1 million shares last quarter at 22, which was their signal to us saying that, hey, we think we're cheap at 22. I don't know if they expect to go into 45, but now it's a question of did they buy back shares at 30 or 27? And that'll give us a little bit of a perspective in terms of where we think the company is perceiving their valuation as well. Okay, let's go to the talking heads on CNBC. Let's see what updates they have right now, and then we'll end it out after that. Amit Brain moves too quick. Just $4 billion in debt, no cash. I'm sorry, I meant $4 billion in cash, no debt. Yeah, $4 billion in debt would not be the best for Palantir. Yeah, $4 billion in cash, no debt. And look, it's a hell of a balance sheet. It's one of the best balance sheets in the stock market, and they are continuing to maintain that momentum. Oh, we got Ray Dalio on CNBC. Interesting. All right, let's listen to him, and then we'll be done for today's show. He's talking about a variety of subjects. Again, Ray Dalio, founder of Bridgewater Associates, one of the most successful hedge funds on the planet. Let's see what he has to say about markets.
Conversation always with you, sort of in the way you look at the world right now and through history, focused on the big themes like debt and the internal order changes. We'll talk about the election. Five big things, excuse me. Internal order on the internally.
Credit, debt, and drives the economy and how that works.
Yep.
So number one.
Yep.
And it goes through a big cycle. Number two is internal order and disorder.
Yes.
So number three, which we're experiencing in the United States and some other countries,
Debt
experiencing at an extreme, right?
Yeah.
Number three is the world order.
Yes.
And, you know, the rise of a great power and then the competition.
This is China v. the U.S.
China and then those.
By the way, Dallio has predicted for the past couple of years now the downfall of the U.S. and the rise of China. So his perspective is that the U.S. is like falling, the Roman Empire is collapsing, and the Chinese are increasing their momentum.
And then, yes. And what is the order? What is the rules?
Right.
Other rules?
Trying to figure
so it changes. It used to be dominant. It's no longer dominant. Number 4 is
Pandemics.
it was, yes, droughts, acts of nature, droughts,
Yes.
floods, and pandemics have killed more people than wars and toppled more orders than anything else. So climate, like for example, and pandemics are a bigger part of our
Yes.
lives. And then number 5 is technology, people's inventiveness, and they come up with technology. And these things go in cycles. The first 3 are big cycles, they've evolved. And then these others are disruptive. The 4 of those are concerning, the first 4 of those. The debt is concerning, the internal conflict is concerning, the external conflict is concerning, and certainly the climate and the cost of the climate is concerning. And then technology is a two-edged sword.
Right.
So those are, so everything that we'll ever talk about and you'll ever interview
Fits into that theme.
fits into
No, you're
that,
right.
and understanding also the relationships between it is key. So seeing it in the big cycle way and seeing the relationship between these things is key.
Every story we talk about, I think, on CNBC relates in some way to these themes. So what about here? How does that fit in? There's just so much enthusiasm. I was just talking about some of the numbers in terms of growth and transitions in the economy. You've been coming here for years. How dramatically different is it? And what should investors know?
Dramatically different. But I think then we go back to the elements of what makes a place successful. Okay, so we take this. Okay, financially, are you successful? Do you earn more money than you spend? Do you have a good income statement and a balance sheet? Okay, that's number 1. Number 2, do you have internal order where the people work together in a favorable way? Number 3 is very important. Are you going to be involved in a big international conflict that's going to be damaging or not? These are really the first 3. Then, of course, climate and technology. So when I come here and whenever country you pick, you ask yourself things like, do they educate their children well in to become talented and then also civil with each other? And do you come out to an environment which lends itself to being productive and raising living standards? These are the standards.
So this checks the
Here,
boxes.
it changed radically when His Excellency MBS took power.
Yeah. So investment destinations.
People don't see this.
Yeah.
You know, every country, there's pros and cons and there are controversial things. But if you're talking about now seeing this and how the changes are taking place, it's a remarkable place. He is a Lee Kuan Yew or a Deng Xiaoping of the area because of the strength and quality of the changes.
Yeah,
that he's making.
well, it certainly that's how it feels here from the investors, and that's the message. I do wonder about. I was hearing you tick off some of those boxes of what investors should be aware of, and whether destinations are stable, you know, for capital. What about the U.S.? Where do we fit in right now? We're going into this election.
Well, we have a real debt problem. Okay, that is going.
You're still not touching treasuries.
I think one man's debts is another man's assets. And the question is, do you want to have it as an asset? It's increasing in supply a lot. And we have a problem here. The supply demand is a problem ordinarily. And I think that you either have to pay back the debt in hard dollars or depreciated dollars because they're going to print. And at the end of the day, I don't want those things. That's not going to be I think a good investment for the whole supply demand. Okay, and that treasury market, that is the basis of all capital formation. So it's it's a bigger thing. And also at some point, when you combine it with the internal conflict issue, if you have a downturn, and we always have a downturn, when the downturn comes, I'm worried about the internal political conflict and the social conflict because we have irreconcilable differences now. In other words, compromising, which is essential in democracy, is considered a sign of weakness. So we now have more of the hard left, hard right kind of conflict.
Yeah, no, you do not back candidates, right? And you're pretty apolitical. But I do wonder.
But I'd be clear, both of the candidates worry me in their own ways.
You.
Yeah.
What worries you about Vice President
Harris?
Well,
I think this left, right, and fighting each other is a problem as it becomes more of the extremes. I think that there needs to be a bringing of Americans together, that middle of that, and making great reforms In other words, there needs to be a strong leader of the middle, I believe, that makes great reforms, because there needs to be reforms. If we're looking at the composition of this, it needs to have great reforms. So neither of the candidates does that for me. So that's.
What about President Trump? Do you have concerns related, for instance, to tariffs or any of the economic policies? I'm wondering if you see a big difference in maybe the near-term outlook, depending on who wins.
There's, of course, a very big difference in policies. One is more capitalist. Trump is a lot more capitalist, and she's a lot more left.
Yeah.
Okay. And the question is, how left is that? It would be great if she clarified things, but we have that. And then we have this irreconcilable differences. So the big differences, there's going to be the big differences in, let's say, tax policy. He will get tariff revenue will be like tax revenue. And the reality is that he's going to collect a lot of tariff revenue. I estimate it'll probably be $500 billion a year, something like that.
So that's a good thing.
Larger from a tax revenue point of view. But at the same time, then that tax revenue is protectionism. Prices of those things are going to go up, but it depends how much he converts that to internal productivity and being competitive and efficiency and all of those things. But either case, you have a totally different picture of how the revenue, and so he's better for the capital markets. He's a capitalist. He's more going to be better for the capital markets. It be the case, there are going to be big deficits. Okay, so we're going to deal with that issue. It's really more a left-right question, and it's a shame because we need to bring the country together in a smart way and make great reforms. We need to do that. And that's my concern.
Yeah, well, I don't see
And then
anyone
when
doing
that happens, so we take the election. Let's take the election. The first question is, can we make an orderly transition of power?
I know you've been worried about this.
If Donald Trump loses by a small margin, that becomes, I think, a question. It's not a probability. I think we will.
You're worried about a repeat of January 6th?
You have irreconcilable differences. So when you go beyond even the election, how will decision making be made? Will they accept each other? Let's say, I think they're going to win the Senate. There's a decent chance of the House, and then the possibility of the presidency.
Yeah.
So how that works, and then the playing by the rules, this is all going to be key to watch.
Right. I guess the question for investors in the long run is if we don't, and you root for the middle, you root for the compromise that doesn't seem to exist.
There's a lot of great, sensible middle and smart people to make the reforms.
Yeah.
We need to make reforms.
Right. So until then, though, I mean, treasuries, you consider risky investment?
Yes, you look at it this way. The way I look at it is, let's say you take the inflation rate.
Yeah.
And whatever your estimate on the inflation rate, it's not a precise, but let's assume it was 2.5% by way of example. And then what is the real interest rate that is going to balance the debtors and the creditors? In other words, interest rates cannot be so high that they're bad for the debtors, nor so low that they're bad for the creditors. And roughly a 2% real rate on that is what matters.
Sure.
So you take under normal circumstances, you take, let's say a 2.5, you add 2 to that number or something, you look at the bond yield. I mean, just making it simple. And then you see variations around that, but the supply demand issue is really the big issue. The quantity of new offerings. And if you look at who holds them, about a third of treasuries of our debt is held by foreigners.
Yes.
And so that they have.
And China's been decreasing.
And they have an issue with that debt. And then and we're going to produce a lot more. So it's not going to be, so the supply demand issue, if you get selling of the debt, we think of supply demand as new debt that's being issued. But there are a lot of holders of that. If they don't have an adequate real return or they're worried about it, they could sell it. That's the cycle. So there's more upside risk on that number.
You've been worried about
downside.
that for a while, though, and you've been warning about this supply-demand mismatch, and yet there still continues to be demand for treasuries. I do wonder if you think we're near some sort of breaking point.
It is becoming much more of an issue, but we'll see it when it comes. But I don't know when I go down and I say, who are the big owners?
Yeah.
And what are they likely to do? The central banks bought.
Yeah.
Banks bought. Commercial banks bought. Foreigners, Japanese
No, and now
bought.
they've been tightening, going the
Now
other way.
they don't want. They have more than enough, so they're being hurt by it. The central bank's losing money on it. The foreigners are losing money on it. And then there's this issue of the conflict and sanctions. So on the margin, you have a problem, but you're also threatening those who have demand. It's an issue.
Is this why you've been a fan of having gold in the portfolio?
Yeah, gold is. Look,
Gold's done very well.
Don't look at. You have to look at having diversification. My mantra is I want 15 good uncorrelated return streams. That's my mantra, right? I start off with diversification. And what you look at when you look at gold, which should be a part of that, is as an overlay on a portfolio, it reduces the risk of the portfolio, doesn't increase the risk of the portfolio. So it's a part of a good diversification. People would have more of it if they just said, what is a balanced portfolio? Aside from the dynamics I'm talking about. But then when you put the dynamics I'm talking about the supply demand, and then you talk about, what the world is looking like in terms of what it becomes confidence in holding, and that's a risk for the treasury market.
I also want to ask you, Ray, about China, because you've been in that country for a long time. You have great relationships there. Investors have been sour about China in recent years. There's been a little bit of excitement lately because they've been trying to stimulate. And I just wonder if you think, first of all, what you think they should be doing to really get their economy back on track into growth mode, and whether you're encouraged.
Well, there are a number of challenges. Let's take the debt challenge, economic challenge. Okay, they have a large debt issue. And a lot of that debt went into real estate. 70% of all savings in China were in real estate. And then you think the other things that they're saving in, stocks and other things, have gone down a lot. So there's been a big negative wealth effect. And if I was to take you through who owes the money to whom, local governments were raising money by selling off land, and that can't happen. And then they also borrowed money from companies and so on, and that can't happen. You have a financial classic issue in terms of debt. And there needs to be a debt restructuring. In other words, how do you deal with these things? There have been many of them through history. You need to do two things. You need to restructure the debt and clean it off the balance sheet and so on. Very difficult process, very politically sensitive, because the person making the decisions has an effect on the wealth. And then you need to have a monetary policy which makes negative real rates so that it's not desirable to hold cash and savings in a deposit. That's what we call pushing on a string. And then when you think about that for an individual something, when you have deflation, cash is good. When you have credit problems and other markets not doing well, cash is good. So you have to make cash not so good, and you have to do that. That's the formula all time. Now it's a challenging formula. How they approach that will be very important, and they're in the process of trying to figure that out. So there's that problem. In addition,
all right, I think we ended there. Not really sure what Dallio said for the past 15 minutes. It was just him saying we need to solve issues. Look, Dallio's breaking down a lot of these issues when it comes to debt, inflation, what it means for global economies. The one thing about Dallio that's very interesting is he doesn't really take a stance. And I want you guys, we'll not listen to it now because I got to get out of here. But if you type in Ray Dalio capitalism CNBC, there are some 2019, 2018 clips where he debates the CNBC panel around capitalism. And he came out with this, I think it was a set of articles a couple years ago where he was like, we need to rethink capitalism. And the CNBC people are just like, what are you talking about? Like, capitalism's great. And he's like, no. The Chinese have a different way of doing capitalism. And I remember watching those a couple of years ago and I was like, does this guy have a lot of money in China. And then I don't know if this is still the case, and you guys can do some digging on this, but I think he has some interest in China, whether it's assets, whether it's stocks, whether it's real estate, whatever his interests are. Maybe it's power and from a political perspective. And I feel it is influencing to an extent his argumentation around how capitalism in America is bad, but the communist capitalist utopia in China is better. And these debates are actually very entertaining if you watch them, because the CNBC hosts are just like Joe from Squawk Box. He's just like, what are you talking about? What's wrong with capital? And then Ray Dalio's like, well, income disparity. And it's like, you can't point to income disparity as a problem with capitalism, because that's a function of capitalism. The goal of capitalism is to lift up enough people so that although there will always be disparities, there will be more people that are not making way lower than what the richest guy is making, because the richest guy should be able to create products and services that allow the person at the bottom to use those products and services to uplift themselves, so that one day they can create products and services to uplift other people. That is the nature of how capitalism creates social and economic mobility. And he was just like, no, that's messed up. Too many rich people. China's thinking of it in a different way. And so I think it's one of those things that everyone should take a look at and have a perspective on. But same thing in this interview, again, not really taking sides, kind of being a little, down the middle, I guess, in regards to his economic theories, which is kind of the same that he was in those CNBC interviews, because he wasn't like China's great, but he also wasn't like China's amazing. He was kind of just like trying to give the perspective on how America may not be the best. So I think there is a world where, Ray Dalio's economic influence is not as large anymore, but the guy still has a hedge fund that is, I don't think he operates the day-to-day of it, but still worth a lot of money. And so when he talks, just like David Tepper and a lot of these guys, one of those people that you listen to at the end of the day. Gene says, I read his book, The Changing World Order. He's pro-China. Yeah, so I haven't read his book yet. Principles is another book that he came out with. That's the most viral book. I think it's safe to say he's at least leaning pro-China, if not explicitly pro-China. And some of the critiques he has about American capitalism kind of highlight that viewpoint as well. Okay, cool. That's it for me. I have to edit an interview that you guys are going to enjoy. I'm actually going to do some work editing this. Usually I don't edit too much, but I want to make a fancy intro. I want to make it good for you guys. So this will be out at 7 p.m. tomorrow. So I think you guys will enjoy it. 3:30, I'll be live, I think, with Tanner. I think Tanner will join me. So we'll be live covering all the earnings that we have today. Robinhood, again, is the main focus, but we also got Meta, Microsoft, a bunch of these companies. So I'll be back in a few hours, and we will see what we got going on with Robinhood earnings. All right, word of the day. What do we got on word of the day? Unceremoniously.
Unceremoniously.
In a way that seems rudely abrupt or hasty. I feel like I've heard this word before. The employee was unceremoniously dismissed from his job, receiving no explanations. They abandoned their camping plans unceremoniously when it started to storm. I think Ernst & Young unceremoniously decided that, hey, SMCI, we are out of here. SMCI, by the way, Eli Lilly got a nice recovery, down 14% to down 5%. Incredible strength with Eli Lilly. SMCI is still down 30% right here on the day. All right. That's it for me. Thank you, everybody, for joining. I will see you guys soon in a couple hours. S&P 500 at 582, up about 0.11%. See you guys at 3:30. Bye, everyone. Have a good one. Robinhood earnings today. Big one. I'll see you guys in a bit.